Good day, everyone. Good morning, and or good afternoon, or good evening, whenever you are listening to this. Today is the first video of this October group, right? And before I start, let's have not disclaimers, because we already know that this is not financial advice, but I want to mention something important, which is how to study and how to ease into the process of translating analysis into execution, right? Which is an important part of trading. The most important part, because the best trade idea in the world is worthless without an execution, right? Now, I'm not supposed to give you financial advice, as that is not my position. However, I'm simply pointing to what works for me when it comes to transitioning from an analyst to a trader, right? Because you can be a great analyst. You can be the world's most expert analyst, right? But that does not mean you're going to be a good trader, right? Trading and analysis are completely different things. They're worlds apart, in fact, right? So what helped me transition from analysis to trading is as follows. It's a 3-step process, right? Which starts with observation. And I know some of you are here, just give us the technicals. No, this is what matters, right? This is the actual sauce, right? Because there's no lack of strategies out there. There's a lack of discipline amongst traders, right? So the steps are as follows. Step 1. Excuse me. No, it vanished. DXY. This is annoying. Alright, well, there. Excuse me. Step 1. Observe. When you first learn about an order block, right, and this is where I would be taking notes if I was you. I can't force you, I can simply remind you. Step 1 is, if you discover order blocks, for example, right, what you don't do is go and trade every single order block that you see, right? What you do is observe 1 order block, 2 order blocks, 3 order blocks, 4 order blocks, 5 order blocks, 100 order blocks, 10,000 order blocks, and then you have reached step 2. After your 10,000th order block, you reach step 2, which is familiarize yourself, right? Familiarize yourself with what your edge looks like, whether your edge is a MACD indicator, whether it's an order block, whether it's ICT, whatever, right? You familiarize yourself with your edge, and then after familiarizing yourself with your edge through repetition, you can now trust your edge to work, whether it's for your own execution or to show it off to other people or teach it, or whatever you want to do with it, right? Because once you have an edge, a statistically proven edge, which you can trust enough to show others, right, then it's yours forever. You can do whatever you want with it. You can let it rot and collect dust. You can teach it. You can milk it. You can do all, right? But this is the process from transitioning from an analyst into an executor, all right? Now, I'll be going in a lot deeper on this, which is execution, but this is the main thing I want to put light on before we continue with the technicals. All right, folks, we're back, and now we're going to discuss monthly to weekly today, right? Next week we discuss weekly, daily, and then finally we discuss daily into intraday. Now, I don't want this to be a waste of my time and your time, right? Because to be frank, I don't need the money, right? I would much rather if there's a bunch of you who succeed in applying these concepts from all three groups, of course, right? The previous two ones and this one. If there's at least half of you, because that is a pretty difficult number, as we know, 90% of traders lose. So if there's half of you who can successfully apply these concepts, then for me, it's a success, right? That is my parameter. So I would really like you guys to not skim over this and actually study what's being said, right? Because it's how the markets move. Now, DXY. The entire year was spent in a consolidation, right? Let's mark the year out into quarters. January. April. And on to three, right? Now, what happened here? What happened here is each quarter represents a candle, all right? And before we even go into that, we have to remember that every 3 to 4 months, there's a change in sentiment in order to bring in liquidity into the markets, right? Because if the markets were always trending upwards forever, then everyone would make money, and that's not how it works, right? If they were always trending downwards, non-stop, in a straight line, then everyone would make money, and that is not how the markets work. If they were always consolidating in a range, then it would be too predictable, right? Which is range high, range low. It'll create a certain pattern, and people will catch up to it, right? So there's always a shift, a shake of the markets every 3 to 4 months, right? Which is what we're trying to catch when we speak about a higher time frame swing move we're trying to capitalize on, all right? So divide the year into quarters, as we have been taught, right? And it is one thing to be taught something, and it is a completely different thing to execute on that thing, right? So what happened here was, let's go to the monthly first, right? The monthly on the dollar, from a simple PDRA perspective, premium discount, right? You pull a fib, low to high, right? We're sitting at the 50%, and the 50% of any price leg, right, is an important key level. The 50% of a ranging market is a key level, right? Write that down. So at the 50% of a price swing or a key level, I expect to see some sort of accumulation, a turtle soup, at or around the 50%, and then a continuation of the trend. All right? And that is precisely what happened here. We are lying at the 50% of this price leg, right? This low that broke the high, right? This is clearly a break of the high. So we're breaking highs, and we're smacking back down into the 50% in the old high, right? So here we have an FVG below the 50%, and FVGs below the 50% level or at the 50% level are an excellent continuation PDRA, right? If you limited your entries and exits and trade ideas only to the premium and the discount key levels, then you would eliminate a lot of losing trades, all right? If you go right now in your journal of the last week, for example, then you'll notice that any loss you took probably had that as a factor that played into it, right? Which is you didn't measure, are we high, are we low, right? Remember, from level 1, those who were there. Anyway, we have here a gap created by this down move, which is also from a key level, which I'll let you find out. And if you're a trader trading the charts, you should know it anyway, right? There's nobody who is trading ICT or trading the dollar should be unaware of the key level that caused this retracement, right? So what happened is that we have a gap, an FVG at the 50%, and we have accumulation happening at the 50% at the gap, right? We also have a gap formed from this sharp retracement leg, and sharp retracement legs are usually retraced at least 50% or more, right? So we have this framework of gap to gap. We have this gap to that gap, which is the a model which I'll introduce to everyone later on, which is the gap to gap model, right? Gap here, gap here. So we can we don't need to know what happens up here, right? We only know the following, which is what matters to us, which is we have this gap and we want to take price from this gap to this gap. That's the whole game. Whichever one gets hit first, we take it to the opposing gap, right? That by itself is a model, right? So a more precise process would be, or just going deeper into it, right? We have this important low over here. As we know, it's all about highs and lows and imbalances. So we have a low, and look at the significance of the low. You're always trying to target a low and always trying to enter from a low, using the low as a pivot point, right? Using this low as an anchor point to price. It'll either break it or it'll use it to continue higher. That's all that's ever happening. There's a high, there's a low. It's either being broken to shift the trend, like here, or it's being used to control price as an anchor to continue the trend, right? Now, what happened here is that excuse me, this gap was not hit over here. Very good. So we've been accumulating in a tight range for 6 months. Now, what does this build? When you're accumulating in a range for a long, extended period of time, it creates interest on both ends, the upper end of the range and the lower end of the range, right? This is the model I use most to enter and exit trades is the simple range theory, right? Range high, range low. They're using this range to create interest in the market, right? So they're purposely contracting price in a small space to create interest, and then they smack into one end, and the first break of a range is usually almost always a fake one. Break in the range and go higher. That's all that happened, right? Ignoring this FVG, ignoring these quarters, right? That's all that happened. So we wait for the accumulation. Now it did manipulate over here, right? This would have faked a lot of people out, right? And it did. Which is, was this really enough? Was this enough of a manipulation? Because usually the strongest reversals, right? This is an important one. The strongest reversals of major swing points happen with closes above the high or below the low to sucker in as many people as possible, right? Precisely like this, right? It's either a close or consolidation at or below the low or high, right? And that is that goes into low resistance tops and bottoms, a topic for later, right? There's a lot to cover. However, for now, right, just note that strong reversals come from deep candles closing and digging, thick bulky candles closing and digging into highs and lows, right? So we closed below this low, right, once, and we never closed twice below the low. And this is where you were warned that this is the dollar bottom, right? If you remember, I came precisely right over here in this candle that dug below the low. This is the bottom based on this simple theory, right? So at accumulation, manipulation, starting here and ending here, and then distribution, right? AMD, power of 3, which is frankly what all concepts boil down to, right? Accumulation, manipulation, distribution. The same exact. Now, why does it matter that this dollar analysis was so perfect? Because this analysis of the dollar, right, if you use inter-market analysis, this offered 2 massive swing trades for this quarter, right? if you were paying attention, right, you could have milked this entire swing in both USD CAD, right, and Euro USD, right? Those are beautiful, massive swing trades, which are quite frankly all you'll need in 1 year, right? If you divide the year in these 4 quarters, right, then all you need is to catch one of the quarters swings, right? And we caught this on Twitter. We caught this one from here to here, right? And we caught this one, right? This one, there was signs of accumulation because price had dropped massively, and then it sprung up. And when price drops with a high volume, sharp, trendy drop, then usually the first bounce is always corrected completely, right? So that's what happened there, right? So leave this part out. Plus, it's the first quarter of the year, which is usually best left untraded. Same as Monday, same as the first week of the month, and so on, right? So leave this. We caught this, and we caught this. You only need to catch one of these swings per year, right? Especially if you're into asset management, right, of large funds, then you only need one of these and you're set for the entire year, right? And I'll go in depth on both USD CAD and Euro USD in the coming days, right? That's the main point, right? Which is we accumulate, we manipulate, and we distribute. Now, the interesting part to me today is to discuss what happens after this. From the manipulation, from the end of the manipulation, which is the start of the distribution, until the target is met. All right? That is what matters to me most. Right? Because this is how to think about it in a robotic manner, right? Which is in a market maker model, for example, right? Which, by the way, is taken from Wyckoff to all the ICT fanboys, right? Of course, he did refine it, but the idea of the market maker model, if you go back, study some Wyckoff diagrams and you'll see exactly where that came from, right? That being said, during a market maker model, a buy model, right, price is going to keep going down and down and down until a certain point in time. Now, that certain point in time changes everything, right? So as soon as this happens, right, you have switched to a buy model, right? And you complete the buy model through the good old lens of accumulation, manipulation, distribution, which happens all through this, by the way, right? Accumulation, manipulation, distribution, accumulation, manipulation, distribution, accumulation, manipulation, distribution, and so on, right? It's all in the power of 3. The market structure break is also part of the power of 3, right? Accumulation, manipulation, distribution. Distribution is the break in the market structure, right? So you have one leg of distribution, you have a retracement, and you have a second leg, right? That by itself is another model, right? And this is not a in-depth discussion of market maker models. It's a rough, extremely rough depiction, right? Which doesn't do it justice. I will be talking about market maker models in the future as well, right? However, the point I'm trying to make is that there's a certain point in time at which the trend changes from bearish to bullish, right? There's always an order block at this certain point in time, right? Always. There's always an engulfing candle. There's always a candle digging into this low, right? Candle digging into the low. The same candle being broken and retested, right? Where the traders mitigate their positions. Price doesn't mitigate, traders mitigate their positions, and then it flies off, right? So when you're trying to buy over here, right, ask yourself, am I at a certain point in time where the trend has changed or no? Using the tools which I have described in level 1 and level 2, right? So what happened over here? This candle digs into the low, right? As soon as this happens, as soon as this close happens, I start to get interested in the trade idea, right? As soon as this happens, now I'm interested. Accumulation, manipulation, and everyone is bullish down here, right? Remember? Exactly. Like, I don't blame them. The way they've been programmed by good old ICT, right? Whether it's intentional or not, I don't know, right? We can all have our theories and speculations, but one thing is for sure is if you follow market structure blindly, you will never make it, right? You will always suck. There's a logic to it. There's accumulation, manipulation, distribution, open, high, low and close, open, low, high and close in this case, right? So we close below it, right, into a higher time frame key level. Now this alone is an entry signal, right? And there's multiple ways to enter a turtle soup raw, like this one right here. One way is to simply enter with a limit at one end of the range, a stop, which is going to be 1/3 of the range, right? Conservatively, you go high half the range, right? This will increase win rate massively and decrease your risk reward, right? But this is probably the highest accuracy method of trading a range ever, right? It's not the most risk and reward. That is another method, which I will be discussing later, right? Or maybe not. But this is definitely the highest accuracy model of range trading. It's boring, but it works, right? So, following that simple model, you go and it rarely fails, right? If it fails, then you are choosing the wrong time and the wrong range, right? So what happens after this one point in time where the bottom forms, right? Which is right over here. Remove this, and keep this, all right? You go into the weekly. So the monthly is saying up, right? Now, for the weekly to confirm me bullishness, I have two options. I have the classic ICT option, which is waiting for it to close above this high of this candle, order block, right? Change in state of delivery, which is the candle that digs in the low or in the high. You wait for it to close above it, and you've confirmed your sentiment, right? So from this moment onwards, we're bullish on the dollar till here, right? That's one way. Another way is to wait for it to close above the breaker, right? Now we're bullish, right? And another way, which is not discussed a lot, in fact, I haven't seen discussed ever, is closing inside the low again and retesting the low. As soon as we close inside the low again, then as soon as this candle closes, right, then that is your entry signal, right? Now, this is a technique I've never discussed before, right? So note it down and test it, right? And it'll almost always, what happens is as follows, right? You have the low, you have one candle closing below the low, and then it closes back above the low. This is the bottom, right? And then over here, and it keeps going higher, right? With a potential for a wick, right? So this is another entry model of range trading, right? All right, folks. Now we're going to discuss the alignment of the weekly, the monthly to the weekly, right? And to look at the monthly bias and the monthly profile, to trade the monthly profile, you look at the 1 day or the 4 hour, right? So to trade the monthly profile, right, you look at the daily and the 4 hour. The summary of trading profiles is like this, right? You have an opening time, you have a closing time, and you have whatever happens in between, right? If you're bullish, then in summary, right, to make it real simple, because if you can't explain something simply, then you don't understand it, right? So to really simplify it is you're looking for price to come open, right? Perhaps an accumulation, week 1, manipulation into a key level and distribution, right? In 2 legs, right? So key level over here, key level over here to cap the range. Of course, that never happens. It's going to go here. It's going to bump back down to cap the range, right? So over here's a key level. And over there is a key level. And I'm going to post this picture to the group, right? This is the summary, right? Now apply this on the monthly, weekly, daily, even 4 hour, right? Even the 1 hour, even lower. But this is the summary of it all. You got this, you got key level being hit at a certain time, and then distribution, accumulation, manipulation, distribution, accumulation, manipulation, distribution, right? Now, applying this to the dollar, which we had seen, we have here the key level, which is the previous month's low into a monthly FVG, right? So before the month even opens, we're going to mark the key levels, right? Just like that. And it looks nice in hindsight, but this is all called real time, right? Have we hit a key level? No. No trade, no entry. A side note, I'm going to allow myself to be sidetracked for a bit, is why didn't this OTE work? That is a question which I'll answer in a future video, right? Why did this OTE not work? Accumulation, manipulation of the body, distribution, kind of an iffy, because there's no really, the low wasn't taken out, and if the low isn't taken out, you don't really consider it as a manipulation. However, you could classify this as an OTE, and many Twitter traders were tricked by this OTE as well, right? So why did this OTE fail? And the answer lies in the intermediate term low, which is this right here. All right, I will leave that for your homework. All right, for now, let's focus on the topic, which is monthly opens, accumulation, manipulation, distribution, hitting a key level. Right, let's go here. Now the key level hasn't been hit. All right, this is where you expect a bottom to form, blending in the monthly bias with the weekly bias with accumulation, manipulation, and distribution, which is expected to occur after this, right? Now, when do we turn bullish? If you watch the previous video, we turn bullish as soon as we reclaim the low. So as soon as this happens, we're now bullish. Stop loss, target, right? And to find an entry, you're going to use this candle, the FEG, and the order block, right? Got FEG. Order block, this specific candle. The change in the state of delivery happens as soon as you close below candle, right? Close below candle equals change in state of delivery, right? Or above for bullish, below for bearish, right? So this was the first entry from the formation of the bottom. So the bottom forms at a certain time, and after that it's buys only, right? The last important point I'm gonna touch on today, after we continue the price leg, right? You got this. Now, remember what I said about, let's say you reached here in price, and we did reach here, right? Why do you expect the price will continue higher? Because we're respecting a monthly PD array, and when respecting monthly PD arrays, then it is healthy to expect that the daily PD arrays will be broken through and used as support, right? It would be concerning if we had closed below this candle, but notice how we never ever closed below an up close candle during this entire run, and we won't even up here, right? So have we closed? No, still bullish, right? And indeed it was bullish, right? So the closes that happen above and below candles are keys. Close above, bullish. Close above, bullish. Close below, nope, bullish. Close above and retest, bullish, right? So we never really closed, not once, below an up-close candle. And if we did, it was to grab some liquidity and keep going higher, right? Because as we know, in a bullish market, bearish candles are engulfed and followed by bullish ones, right? And it was a beautiful price swing. It was the price swing of the year, in fact, which we got. And that concludes the monthly to weekly to daily teaching. I said monthly to daily, monthly to weekly, but it's monthly, weekly, and to see the monthly profile properly, you got to go to the daily chart, right? So in summary, because that was a lot of words, right? The important takeaways out of all that are: 1, how to study, if you already know this; how to frame a bias; three is how to probe order flow and milk the bias, right? Now, I don't want to go too heavy for the first day, so that is all for now, all right? There were some extremely important points mentioned, such as what you consider during an upswing, right? I will mention something right now, which is number 1, how to trade a profile, right? How do you trade a profile of a candle? How do you probe order flow during the price swing? The importance of closes. Versus not closing. In a bullish market, bearish candles or bearish engulfing candles are followed by bullish ones, right? An important thing to note, right? Because I know there's some advanced students inside here. And to them, I will give you this reminder, which is me, for example. If I can take away one thing which I can implement into my trading, right, then I'm satisfied with what I'm watching, right? So have that same mindset. Obviously, this is a more advanced class, so a lot of the things I'm saying are repetition, and repetition is good for the brain. There's a saying which says, repetition teaches the donkey, but that is not appropriate for this setting. But it's true, right? Even if you're stupid, which I'm sure a lot of you are not, then repetition is always a good way to sharpen your blade, right? Practice makes perfect. That saying wasn't invented for no reason, right? So whatever things you already know are being repeated, good for you. There you go. More practice for you. And I've mentioned a few important things, which is the failed OTE and the concept of reclaiming highs and lows, right? Those are for your study. Only to the advanced students, right? Because if you're not at the advanced level, then you are better off studying the basic PD arrays and then moving on to those. So failed OTEs and reclaimed highs and lows. Right? That concludes today's teaching, and see you all in the next one. And good luck and good trading, and see ya. Alright folks, welcome. Today we discuss the final teaching of October, which is the intraday price action. Right? Now we're gonna be focusing mainly on three things, which is number one, the Asian range model, first discussed by Chris Laurie, and then of course by ICT, now by me. Number two is the 4 hour to the 5 minute alignment and the 1 hour to the 1 minute alignment. Right? Now before that, let's talk about the importance of having a model. Importance of having a model. Now, what the average trader will do, and the average trader loses 9 out of 10 average traders lose their money, right? So 95% of traders are losing money at all times. What the average trader does is he flip-flops between strategies. In this case, if you're an ICT trader, he flip-flops between PD arrays, from the breaker to the order block to the FVG to this to that, right? So it's a common mistake to flip-flop between strategies and end up losing overall, because you have no specialty, right? You're a man of all trades, master of none. What you should be doing is focusing on one pair and how it moves at a certain time, and that's all you care about, right? If it moves the way you are accustomed to see it moving, then you enter a trade. If it doesn't move or it moves strangely, then you stay out. When in doubt, stay out, right? And study what happened. And so we delve into the Asian range model. Of course, the model is as follows. Step A, mark Asian range, which is 8 p.m. to 12 a.m. New York time. Step 2, wait for one side to be purged. And step 3 is enter with a 20 pip stop loss and a 20 pip take profit, just a blind entry, right? Now this model will offer you 5 trades per day, all right? Per week, excuse me, once a day. Five trades per week. 1 trade per day. If you only trade this, that's all you will ever need, right? I know one of my buddies, he's a funded trader, right? He makes quite a lot of money as well as on his funded accounts, as well as his personal accounts. And this is the only thing he trades. He trades nothing else. He doesn't know how New York moves, right? He has an idea, right? But he specializes in the Asian range. And that's how he makes his living, right? So all he cares about is catching these 20 pips, and that's all that matters, right? Catching the Asian range manipulation from the Asian range high to the Asian range low, and that's all he ever cares about, right? If you win, you close the charts and you wait till tomorrow. If you lose, you close the charts, study what happened, and wait till tomorrow. And this is the most difficult part, which is waiting after losing, right? Because human nature is gonna incline you to get back in and make it up as soon as possible, right? But that is the incorrect behavior, because your setup is only gonna come at a certain time, right? In this case, you're gonna have to wait till the next day to enter a trade, right? So what do? You go live life, if you have one, right? Hopefully you have one. You go hang out with your friends and family. And if you have no life, and you have no friends and no family, then you sit down and you study the mistake and make sure to not repeat it the next day. And that's it. It's that simple. Finding how price moves at a certain time, and that's all you need, right? Specialists, I always say this, which is specialists always get paid more than general practitioners, right? And this applies to every field of life, right? So an illustration of this model is going to be over here. This is Euro last week, right? Because most of you voted for Euro. So we have mostly Euro traders in this group for this month. I was going to say quarter, but that starts next year, right? So this is Euro. Asian range from 8 p.m. till midnight, right? Range high, range low, that's it. Blending the Asian range theory with a higher time frame bias will allow you to make a lot less mistakes than simply blindly taking the Asian range model. And connection was lost. Let's go and connect once again, and I'll be back right now, folks. All right, we're back. Now, blending the Asian range theory with a higher time frame bias, a correct higher time frame bias, is going to yield you astonishing results in accuracy, right? Let alone the fact that the model itself blindly is a pretty good model, a pretty solid, tested model. If you added to it your own touch, such as my range theory, right, which is taught in level 1, then you can get a pretty accurate model, a solid, reliable model, which feeds you day in, day out, week in, week out, and it's never going to stop until 2030. Right? So that's basically the model, which is Asian range, low to high, you're out. And you wait till the next day. Asian range, high to low, you're out. Asian range, high to low, you're out. Right? And so on. Now, you want to wait for the Asian range to consolidate and chop around for the best trades to form. Otherwise, such as this case, where there was no consolidation, the Asian range was simply it did provide you, and this is, you'll notice this, which is it will provide you with a high to low, but depending on how choppy the Asian range was, if it's choppier, it'll give you a clean delivery from the high to the low. If it was an expansion, then perhaps it will give you the high to the low, but it will be in a lot slower fashion. Right? Choppy Asian range, clean delivery. expanding Asian range, or not so clear for chop, right? Over here, for example, then you will get the high to the low, right? More often than not. But how you get it depends on how choppy the Asian range is, and it is seen on the 5-minute better than the 15-minute, right? And classic range theory, right? You apply it even going down to the 1 minute, right? You got the Asian range over here. It looks like a small, insignificant portion of price action, but the deeper you go, thanks to the fractal nature of price and time, it makes a lot more sense and gives a lot more opportunity. I was going to say the downer, the lower you go in the time frames, right? Asian range, you take this end, then the high to the low. Now the high to the 50% is guaranteed, right? And here's some extra one for the notes. As always, the 50% is a key level at which we always consider taking partials, and at which we have a high probability of reaching, right? Whichever trade you enter, whatever take profit you put, there's a high chance. Let's put it this way: if you have a trade and your take profit is the opposing end of the range and a duplication of the range itself, right? Or a deviation, then perhaps it'll reach the deviation, perhaps it won't. Perhaps it'll reach the opposing end of the range, perhaps it won't. But one thing is guaranteed, is that it'll reach the 50% of the range, right? And of course, then you blend in your market structure knowledge, right? Show Asian range, low, you blend the Asian range, the timed range, with market profiles, low, high, lower low, higher high, breaker. And this breaker is going to lead me to the Asian range high, and you can compound and pyramid using that logic in mind, right? Now, for your study, and something which not many people talk about when it comes to Asian range model, is when the Asian range is broken, right? So the manipulation happened and it's broken, then it can be used as a key level support or resistance, right? An SR flip, basically. And that is, I'll show you some examples, and the rest is for your study and how you can use that in your own trading, right? That's all regarding the Asian range model. Now, let's go on to the 4-hour to the 5-minute. All right, folks, so now we discuss the 4-hour to 5-minute alignment. All right, so it's going to be a 4-hour bias with a 5-minute market profile. All right. So we have here market profile, euro bearish, breaking lows, retesting them, and rejecting highs. So we expect euro to smack into this order block and then decline down to these lows over here and then over here, right? So the profile is bearish, the bias is bearish. Now what we do is we try and catch a slice of a 4-hour candle. 1 hour as well, but now we're going to first discuss the 4-hour, right? So we have here a stab into a key level, these equal highs over here, right? With an SMT forming with a dollar. And SMTs play an important role in the formation of highs and lows. We have a massive decline. We have a break through this candle. We stab back into it and fall further, creating an order block. All right, FVG. An order block. Now, the process is as follows. you're gonna mark the 4-hour key level, in this case the order block, right? And when it's a thick, stubby order block, then you can take the open as the key level. When it's a long wicked order block, then you can take the wick to the opening price, right? So opening price, order block. And you go down to the 5-minute to catch this move. Now, whenever you have an order block, a correct, well-chosen order block, then one guaranteed trade, no matter what your bias is, one guaranteed quote-unquote trade is trading from the order block, the key level in this case. Trading from here, so you get this, you get a massive decline, you get a consolidation, right? Consolidation, accumulation, manipulation, and distribution, at least into the beginning of the retracement leg, right? Which is right here. That's the concept. Now, applying it over here, you have a 5-minute market profile, breaking lows, retesting them. So any pop above an old high is going to be expected to be a false rally, right? And the same exact concept over here, which is order block. We can expect us to smack into the order block, the key level over here. Just write it down, OB. And create a 5-minute range over here. And we have a trade idea from here until the beginning of the retracement leg into the key level. And if that was a mouthful, you might need to watch it a few times, right? So you got this accumulation, manipulation, creating the high of the day during the kill zone, quote unquote, right? In the shape of a range. Get the opening price of the 9-hour candle, right? Because we're now dealing with the 4-hour candles, and we're essentially treating the 4-hour candle as a daily candle, right? So accumulation, manipulation, and distribution, right? Accumulation, manipulation, age range of here, manipulation, and here's another fractal thing I look for, is I look for the manipulation to happen, and it's not just gonna smack back down. Manipulation, and then within the manipulation, there's an accumulation, a manipulation, and a distribution, right? In this case, a 1, 2, 3 drives pattern. 1, 2, and 3, right? And then you can expect a crash on this time frame, right? So that is the 4-hour method. Now we move on to the 1-hour method, and this can be applied to any 4-hour key level, a breaker, an order block, rejection block, whatever, right? However, I like this one specific model, this 4-hour order block to retracement leg low model, especially with order blocks, which are ranges broken and retested. Range, consolidation, expansion, retracement, expansion, right? So we're blending a bunch of concepts together. Now we move on to the next one, which is the 1-hour to 1-minute market profile, right? Let's choose an easy example to begin with, right? Because when learning a concept, then you want to start with an easy example. And again, you'll notice that when this model works, then it's because you were trading outside of a kill zone, right? I don't like using the word kill zone, right? Or the ICT kill zone, because it's simply the open, high, low, and close times. However, they do hold their weight as good times to go hunting, right? So, same model, order block, right? The high of the week formed over here on Tuesday. Monday range and Asian range. Extremely high probability conditions, right? You're smacking back down, and this is an FVG, same exact model over there, right? The order block that rebalanced in FVG is a high probability order block. 1 hour key level with a 1 minute market profile, right? In this case, you mark out the 9 o'clock candle, right? All right. And here's your key level. Here's your 1 hour order block, and this is your trade, which is going to finish as soon as you reach down here, right? Got the order block created. You got the open. Now we're treating the 1 hour candle as a daily candle, right? So accumulation, manipulation, formation of a range, manipulation, range, SMT or turtle soup, and then distribution. Same thing, which is order block. Remember? Order block. Formation. Smack into key level. And back to the beginning of the retracement leg. And that is the model. Right? Common questions or common mistakes which you may make in this model is blindly trading any random order block while not keeping in mind the market profile and the higher time frame bias, because this is all the best trades are going to happen in alignment with the higher time frame bias, right? And they're all going to happen at the same time. So if price is not moving the way you want it to move, then you're either not aligned with the bias, the correct bias, which is why what's supposed to happen at a certain time is not going to happen the way you want it to happen. For example, if you're expecting a manipulation, but you're incorrect on the higher time frame bias, then you're going to get a distribution, right? And that is how you get wrecked on a lot of false turtle soups, right? That's what happens when you blindly buy highs and lows, buy highs and sell lows, buy lows and sell highs, excuse me. It's been a long day. So yeah, this concludes the model. Your homework is to go back in time, because history of the charts is a gold mine, and it is basically a time traveling machine you have between your hands. Go back in the charts and mark 9 models of each of these. The Asian range, keeping in mind the breakout and retest of the Asian range, and this model, and the application of this model fractally on the higher time frame. That concludes our teaching for today. And happy studying. I'll be giving some homework in the group and some examples throughout the upcoming weeks. All right, to ingrain the knowledge in your heads. And I wish you all good luck and good trading.
Said somebody wrote in a group, and I am not in any chat room, you know.
Go up in the messages. You'll see the link to the chat.
Okay, sorry. Okay, thank you.
No problem. Anyway, folks, one thing I want to make clear is I would like you all, see, this is going to last 4 weeks, all right? And it's going to happen and it's going to end and life will move on. So you can either make use of it, all right? Or you can simply just enjoy the show, all right? You can either become a better analyst and or trader thanks to this group, or you can just be a participant, right? There's always, in any group of people partaking in a group activity, there's always participants, which is the most, and there's winners, all right? So I would like a higher percentage than normal of you to benefit from it, right? That is my wish, and the rest, aka the work, is up to you, all right? Because for me, it's not just about the participants' money and the subscribers count, right? It's more about the impact. Is it reaching a lot of people? Are people benefiting from it or not? That's what matters more to me, all right? So let's get started. Get out your coffees or your coffee, right? Set everything aside and enjoy the show. 130 participants out of 500, so I'm hoping at least there's a bunch of you who are recording, all right? So let's get right into it. Can you see the screen?
No.
Also,
Share screen. Can you see the screen now?
no?
How about now?
Yes, it's okay right now.
Stop sharing.
Yes.
Start recording. Share screen. You see it now?
Yes.
Huh? All right. Well, let's get started. We're going to have euro. All right. So we go to the monthly. As we know, we want to do a top-down analysis, meaning we start from the higher time frame and move down into the lower time frame. Excuse this, FVG, for my use. So monthly. On the monthly, we've hit an important liquidity pool, which was pointed out to you earlier, all right? Which is this one right here. This had been pointed out from the top. Exactly. So 700 pips ago, I had warned everyone that euro is going to be drawn to these lows, and we have reached. And as we know, when we reach a higher time frame liquidity pool, or when we hit a higher time frame objective, then we can expect some chop, right? That is for certain. So when we hit a higher time frame liquidity pool, then you can guarantee some sort of chop, right? Continued by a reversal or a retracement. So we've hit the liquidity pool, so we can expect at least to trade back. Of course, let's go back in with a good old hindsight bar replay, right? Because all we do is hindsight around here. So we go behind. So this is how the previous week's candle closed. Now, what do you see?
Looks like a bullish rejection candle.
Now, for those of you who studied anything other than ICT, right? This is a doji, right? In classical price action, right? A doji candle indicates a reversal, right? Especially when paired with a support level. So this candle alone by its shape, you can expect some sort of rally in the next candle. And this happens also in the opposite shape, right? When you see a bearish doji, then you can expect a bearish continuation, right? A long wick. So it's pushed down and pushed back up, right? Or in this instance, pushed up into the breaker, right, over here. And then it was pushed back down, right? So we can expect at least to target the FVG in the next candle, right? Because we've smacked into a higher time frame liquidity pool, right? Smacking into it, rejecting off it. So we can expect some sort of retracement, right? And that is the framework. So weekly is telling me that we're going to go a bit high, right? You go to the 4 hour. We have here good old range theory, right? Range low, range high, and the mid-range, right? So what is the market profile saying over here? Go on, don't be shy.
Bullish
Why?
because of turtle soup and order block. Big beefy order block.
Big, beefy, juicy, thick candle stabbing into a liquidity pool, right? So we have a range, right? Range low, range high. We stabbed into the range low with this candle. So my eyes are on this candle, right? I'm looking at this one candle over here, this thick, bearish candle. You can also choose this breaker over here, right? Low, high, lower low, higher high, breaker, right? And this is a consolidation, right? So consolidation, expansion, retracement. Everyone is bullish down here, right? On NFP, if I'm not wrong, right? Because I don't pay much attention to the calendar when it comes to swing trading. But I believe this was NFP last Friday. Stab into this consolidation, right? And then continue higher. So we're breaking this high, breaking highs, rejecting lows, breaking highs, so we can expect to target this high at least. All right, that's almost a given. All right, so this was this for me is extreme high probability conditions. This is my bread, and this is my butter. Now, if I was you, I would note this down, right? Which is consolidation. Right, this is the consolidation. whether it's an SMT, swing failure, or it's a turtle soup, right? As soon as the consolidation breaks out, the bottom's in, as you'll see right now, right? So bottom's in. Now we're looking to smack back down into the consolidation, all right? Smack back down into it, and then continue higher. This is the order block, right? Old low, candle smacking into old low, right? Why not this one? Why not this candle? Why not this candle? Anyone can answer? Why am I choosing these two candles? This and this.
They have the biggest body.
Exactly. So we want to focus on the big, beefy, thick candles, which are forced above a high or below a low, which is also seen here, right? Look at this. Look at this candle over here, right? A big, thick candle stabbing into a high, being broken, and then being used for them to mitigate their positions into this candle and away, right? Consolidation, expansion, retracement, expansion. Right, over here again. Consolidation, expansion, retracement, and expansion, right? So we're bullish. Now we go down to the 1 hour, right? We have broken this high. Is this high broken or rejected? And why?
Broken because we closed above it with the speed and velocity.
Right, and we closed. What is speed and velocity? What does that mean?
Displacement, you see, it went way higher than the high.
We've closed multiple closes above the high, right? So when there's a low or high, when you close multiple times above it or below it, you're unlocking the high, right? So high, unlock the high, we're bullish. We're expecting to trade back below the high and then higher, right? Also, we are breaking through the 50% range, right? So we can expect a stab back into the 50% and then to the range highs, right? And if you have any questions, then you can ask right now or note them down, right? And here's a little curiosity, which is breakers leave gaps unfilled, right? That was something I had my eye on. Breaker over here, gap unfilled, right? But anyway.
So you'd use that to place the stop loss?
Yes.
On the gap?
Yes. Expecting to be a breakaway gap, right? So.
Okay.
Now, we're relying on this thick one candle to push us higher, right? This one long, thick candle, it is the one which you're expecting to push us higher, which is also a 4-hour order block, right? However, we also have the rule of buying low and selling high. And right here, we are high, right? So we're gonna wait at least till the candle's high, right? To look for a favorable reaction. We opened the week down here, right? So already it's showing signs of weakness, meaning this breaker is not going to be the exact reversal point, right? And we have this gap below here. And as you know, price moves for two reasons only, either to attack a high or a low, whether it's a wick or a body, or to rebalance an imbalance, right? So we go down into the imbalance, right? And this is where you should be bullish or not bearish, all right? So you mark the weekly open, right? Buy below the candles open when bullish, and sell above the candles open when high, when bearish, right? So we're smacking back down into it. And over here on the 15-minute, we have a market maker model as well. Consolidation and smart money reversal into a higher time frame PD array, right? Which is the 4-hour order blocks, 0.5%, right? Or 0.5 level. So now, what do we see here? What is
Structure shift.
What is this?
I was thinking it was a true breakout because we got multiple closes above the high.
That is correct. So we have, first of all, on the higher time frame, right, which is the 4-hour in this case, the 0.5% of the order block is being respected. Yes or no? Right?
Yes.
So that's the higher time frame key level. All right. We're respecting this discount FVG. And by the way, if you eliminate all the FVGs and order blocks which are not discount and premium, then you will eliminate a lot of shitty trades. All right. That one, I would write it down if I was you. All right. So we have here again consolidation, expansion. Now, when you see this, you expect retracement and expansion. All right. And this was the trade idea that was birthed on Twitter. You got this. I'm relying on this FVG, right? Which is inside, and note this down, FVGs on the lower time frame inside order blocks on the higher time frame are high probability. All right? So FVG on the 1 hour inside of an order block on the 4 hour. All right? Leaves open a gap. And this was the idea given on Twitter, right? Right here. It looks easy in hindsight, huh? But in real time, it is not an easy task. Tell me what's up.
I have one question. What about time?
Time?
Yeah, because you took the trade at 1 p.m.
What?
If I'm not mistaken.
What time exactly? Was it before or after 1 p.m.?
It was after, I think 1 p.m. If not mistaken.
It was after 1 p.m.? Oh, he vanished. So this was a trade idea, folks. Right? You got this here. So to filter the trades, we're below the weekly open into a higher time frame key level, consolidation, expansion, retracement, and expansion. Right? And another thing is Mondays, right? Asking about time. Mondays are expected to be a choppy, volatile up and down day, right? So if you see a large movement on Monday, then you can expect a lot of that movement to be retraced, all right? You got this, and you got a beautiful, gorgeous reaction, right? A lot of challenges were passed. A lot of money was made. Of course, when I get it right, oh, thank you very much. Oh, we love you. When I get it wrong, then fuck you, right? That's how it goes. But this was a good one. This was a good one.
Romeo, may I
The
ask you
question,
something?
yes.
This was a
Go
trade
on,
idea I
go.
wanted to go and look at, right? Now, any questions?
Yeah, I've got one. Because your stop loss was kind of large, like very low, and on a 1 hour time frame, there's like a little turtle soup.
My actual stop loss, right, was not this. Mine was a lot more conservative, right? But a lot more tight. However, when I give a trade out to others, I like to give them this large stop loss because so they don't get too excited and risk too much, right? Because when they see this large stop loss, then they become more wary of the risk. If I gave you my stop loss, you'd go all in, right?
Is your stop loss 1.05327? Yeah, right.
That was one of them. That was one. I had two entries, right? One was that, and the other one was a bit more risky, right? But yeah. And by the way, you're saying it's too large. Is it a 1 to 2? Yeah. Is it a 1 to 3? Almost. If you had taken this, the consolidation as the stop loss, which was what I was going to do in the beginning, but I don't want to go and cause any drama with the market makers, right? So this was given out, which is pretty decent, right? Pretty decent. 1 to 2, 1 to 2.5. Yeah, so that was your idea. Any other questions?
Why was it the low of that candle? Is it because it's 25% of the order block, or why was it the low?
This is a classic FVG stop loss, right? When you have an FVG entry, then the stop loss is going to be the FVG candles low, right? So it's either this, or it's the low itself over here, or it's the low of the consolidation, or if you're a bit more versed, then it's a lot tighter, right?
Could you
And
say
yes,
that
I know
again?
a lot of you would like to have the tighter stop loss, right? Which was mine, which was in fact, of course, looks easy in hindsight, but mine was a lot tighter than you can imagine, right? Sounds kind of weird, but yeah. Mine was, and if you look closely over here, using the same logic, right, you can tell where the stop loss would have been, right? And I will discuss a high risk to reward entry method in the upcoming live streams, right? One of my personal ones.
So my question is one of the reasons you Monday to have a large expansion or somewhat of a full retracement of the original Sunday move down because of Friday's price action?
No.
Nothing to do with it. Okay.
No. But taking price from the weekly open, right? Taking price from the weekly open, whatever happens from the weekly open, taking price from there with some logic, of course, as you've seen, back to at least the weekly open is a reasonable expectation to have, right? And apply that to any candle. Taking it from any candles open, whatever the Judas was from the beginning, at least you're going to have a retracement back to the weekly opening price or the candle opening price, right? That by itself is another model, right? And of course over here, everyone, all the over here, of course, all the Twitter ICT traders were short this breaker right here, right? I'm sure a bunch of you also stuck in this, right? Over here. But no, that is pattern trading. And if you shorted this, then, you know, quite frankly, you deserve it, right? Because we're not bearish on euro. This is a fake breaker, right?
Is 1 o'clock one of your entry times? 1 p.m. What time do you start your trades in the PM session?
I've already said that, yeah, of course. It is. Now I'll discuss a common mistake right now, right? Which is getting stopped out again and again before it finally goes your way, right? So getting repeatedly stopped out, before it eventually goes your way. Why does this happen? It's either because you entered. No, it's either because you entered too early.
Timing.
With a tight stop loss, right? Yeah, that's pretty much the only reason it ever happens, right? Which is trying to get a large move with a one. You're trying to get a 1-200 risk reward, basically, right? Which can be done, but there is a logic behind it. And if you don't have that logic, then you're better off just trading the higher time frame candles themselves, right? 1 to 3, 1 to 4. 1 to 3 is the excellent, by the way. 1 to 3. I'll post a graphic, right? But 1 to 3 is an excellent. If you have 1 to 3 and a 50% win rate, then you'll make money, right?
I have a question regarding to execution. Can you go to the 5 minutes, please?
Sure. Now, see, Adam and Ibrahim, you guys were more advanced, huh? So try and make the questions more relevant to the beginners as well.
Okay, I answered the questions in the DMs. When I judge, I can answer them. Okay, so now when it hit the FVG, did you enter with the tight stop loss or after the CSD and then you up to the lot size?
Both. One of the entry methods, and this will probably fly over a lot of your heads, except a few. One of the entry methods is using the thrust candle as a stop loss. Now, what is a thrust candle?
Is it the first one that hit?
It's the candle that caused the change in the state of delivery, right? Now, in this instance, the thrust candle over here, for example, would be this one, right? This specific candle is the stop loss, right? Another one. This candle caused the market structure shift, yes or no? This one. This 9 o'clock candle, right? This is the stop loss, right? And that is a theory for you to back test, right? That is just one of my entry methods, using the thrust candle, the candle that broke the market structure, right, as the stop loss, right?
Can you go to Tuesday? We had a turtle soup in London session. I used the same logic. It took the low, it displaced higher, but it came back and took the stop. It took the low.
You were being selfish / greedy. Right?
I mean, I went break even.
Now, for this, of course, it's hindsight because I was sleeping at this time, right? But where would you, now you're expecting this low to be turtle soup, right? This one over here. The 5 p.m. low, right?
Yes.
Now, what's your high time repeat array?
H4 FVG.
All right. There is none, is there? Yeah, very tight one. Sure. Good one. Right. Now, this is a range. Yes or no? Range low, range high.
Yes.
What are the rules of range trading when entering at an extremity? When you enter at the extremity of a range, right? What is the stop loss?
It's either a intermediate term high or a PDA, or you wait. Yeah, you discussed that in the method.
Or you do a 1, 2,
Or
3.
a blind entry. Yes, a 1, 2, 3. Yes, exactly.
Or a blind 1 to 3, right? That's also valid.
1 to 3.
Yeah.
Right? If your entry was based on this wickless FVG over here, right? Then your stop loss is going to be below the FVG's candle. Remember. Right? You always have to you have to leave some room for the market makers to breathe and gather their positions before expanding higher, right? So let them take their time. Don't interrupt their process, right?
And the reason you wouldn't put your stop under the other FVG's low is because of the breaker, correct?
That is correct. So we expect this candle, by the way, the stop loss is an FVG, right? First of all, it's the range. If it goes that low, right, then it's not that bullish, right? Over here. We want to see a shallow stop run because it's a strong trending market, right? And in strong uptrending markets, lows are left untraded too. That's a sign of strong trending markets, right? Over here, low untraded, smacks back up, right? So it's a strong trending market. We expect shallow stop runs, right? Smack into the low, accumulate, right? Scare everyone. We're bearish, right? I'm pretty sure some people sold this breaker, even amongst you, which should never be happening. Right here, pattern traders got wrecked, and yeah, that is why you leave this. You expect this FVG to be left untapped, right? Because of the breaker, which
but
never got traded to, right?
But yes, but it did a mini displacement. It had no FVGs in it, but look, before the last tap,
here, right?
Yeah.
This is when the good old saying wicks, right? So what is it? Wicks do the
the damage.
Body tell the stories, right? It never closed twice below the FVG, did it? Below, above, below, above. It's finding it hard. Price is finding a hard time going below the FVG, right? So, yeah. Right at 3. Yep.
So is one of the reasons that you're more specifically bullish on euro because of the time that the liquidity pool was hit on the weekly chart or the monthly chart?
No.
I thought I was talking. So it closed into the range, which what you mentioned in the last video you made in the group. So is that an indication to go break even?
What do you mean? Over here?
Look, the multiple candles close into the range. You said it's an indication to
close below, close back above. Now, if you're going to go by that model alone, right, which I haven't given a name yet, right, but if you're going to go by that model, then I saw some, was it Matt Don, the cranky guy? He was saying he was saying filter candle theory, right? Which is some
Bullshit.
I haven't seen it yet, but I know the person who
Yeah, who's a massive bullshitter.
exactly, right? That is that's not a very he's not a reliable source, right? So as far as I'm concerned, that's bullshit, right? Close back in the range. Now, did it test the range low after closing back, Adam?
Yeah, it took me out.
No, it didn't. No. Did it test the range again? The rules of the model say close below, close back above, and smack back into the range, right?
In outside the range.
No, this is the range low. We close below the range, we're bearish. When it close back up, we're bullish. However, we expect a smack back into the range low, which happened.
Yeah, to re-enter, yes.
That is what took you out.
Yeah.
Right?
Yes.
So yeah, that's it. Also, always pay attention to the closes, right? 0.5, the closes of the order blocks. If it closes twice below the 50% of an order block, then there's an 80% chance it goes to the low, right?
My takeaway was it. I mean, we have a pretty gay week. I mean, CPI, FOMC. That was one of the reasons that I say it is what it is. And I mean, it's expected gayness, if I may say.
Yes, but this seems pretty like in hindsight, of course, it seems pretty obvious. But even applying the most basic range entry, right, which is this, which is by itself a model you can live on, right? Which is this. Even that says your stop was too tight, Adam. Right?
Your iPad's gonna die, by the way. It's at 2%.
That is correct, and the live stream is over anyway, right? I hope you found that insightful. That was a fun trade to call out and trade. It was gorgeous, right? I'm done for October, right? However, if I see anything else interesting, then I will point it out. Of course, as we know, the draw on liquidity for $1, the draw on liquidity for the DXY remains up here for now, right?
Also, last week you mentioned it will tap into the 2-week breaker or the monthly breaker, but you said trade idea done. So you're expecting choppiness, or you just abandoned that idea?
The trade idea is done, meaning I'm eyeing the dollar, right? Dollar.
So you will stop being bullish for euro.
I'm expecting chop, right? Bullish, I don't know, but this low is the key, right? On dollar, this is the key low. So we have the draw on liquidity, right? And we have the key low, right? The expectation is to turtle soup this low and attack that high, right? However, how shallow the stop run is, that we will see in the upcoming days, right? The last time I had touched the dollar was down here, if you remember, right here, in this candle for turtle soup. That is the last I saw of it.
So no more bullishness for euro as dollar hit that low.
I'm neutral. If you want to go trade, go ahead and trade. For me,
I
caught the meat of the move. Right, for me, it was in fact, I've been catching on euro. I caught this low over here. I caught this high. I caught this low. Not this one, right? I caught this low, right? So I'm this range is playing out pretty good. But for now, I'm letting this range. I'm letting it be, right? Whether there's a real breakout that happens or not, I don't know.
So the analyst in you is telling you to sit down, or is it just the trader? Because you already made money and you will sit out. What part of you is it? Both of them telling you to sit down?
Both are saying, the analyst is saying there's going to be chop, right? Up and down movements, volatility, right? We're expecting volatility. Bearing in mind that the higher time frame, the drawn liquidity is going to be this this high up here, right? The drawn liquidity is going to be this high up here for dollar. All right. So yeah, that pretty much sums it up. The higher time frame key level, I think there was a weekly FVG up here, right? From there you can expect.
A guy is asking you if he can talk. His name is Austin. He wants to ask about the 159 H4 candles and QT stuff. I didn't understand the question, but he's asking to talk.
Quickly, because it's 1%, and you're the last questions, Austin and Elizabeth. Go on.
Yes, good day. My question is, you said that the 4 hour 159 are important, right?
Right.
Could you base that off of a QT, a quarterly theory, on the 4 hour chart, so that for example, if QX is a large range, wait until no, not QX. If quarter 1 is X, right, a large range, we can use quarter 2 to consolidate, and then quarter 3 to
I haven't studied Day's theory, right? I know Day. I like Day. He has good content, and he's a good trader and analyst, right? However, I haven't studied his theory, so I don't know. What I'm expecting is consolidation, expansion. That's it, right? Small candles, large candles. When there's a lot of chop on Twitter, everyone's saying, "Oh, it's going to be like this forever," right? It's getting boring, right? Horrible price action, right? And drawing the heartbeat diagram, right? You know the meme they do during commodity markets. When I see that, then I expect manipulation, right? Small candles, manipulation, large candles. That's it. Happening within those periods of time, right? Monday, Tuesday, 159, week 1, week 2, and so on. Even the yearly chart. Same thing.
But even so, normally Monday, Tuesday, Wednesday, you'd look for AMD in that session, right?
That is correct.
And prices fractal, right? So even if we say we're going to use the 159, could you use that same idea on it?
Yes, you can.
Okay, all right, that's it. Thanks.
All right, folks, the questions are over, right? I will see you all in the next one. It was longer than I expected, right? And my apologies for being late, right? Of course, Matt Dawn is crying all the time. And when the stream is here, he's not here. Very nice. But anyway, there's a stream, folks. Hope you enjoyed it. And there was some good stuff shared. Study it well, and good luck, and good trading. See you this weekend.
Take care.
Ciao. All right, folks, welcome back. Can you hear me? Is my voice audible?
Yes. Yes, sir.
All right. Welcome, everyone. There's over here, we have 100 people right now. All right. So what's going to happen right now is, and of course, excuse me for being late, guys. It wasn't a time-sensitive stream, so I had to push it back a bit. So excuse me for that. And today we will speak about daily to 4 hour and a review and an analysis of last week's price action. In hindsight, of course, right? As usual, only hindsight. And then we have some FAQs, right? So it should be a good one. Now, is anyone recording?
Yes, Rabbitman is recorded, like last time.
Rabbitman is recording. All right. I will too, just in case. All right, so how's your week, folks? How was the weekend? Adam, huh? With your
yeah,
positive?
made money for the first time.
Yeah, I mean, Euro, we're going to see right now what happened over here, right? It gave a good, it gave a good and a bad bunch of price action, right? We will see exactly what happened. So to begin with, we will start with the daily to the 4 hour alignment, right? And as we go deeper into this group, this mentorship, quote unquote, then we'll go into the even lower time frames, but that comes later, right? For now, we go slow. There's no hurry. Take your time, right? So
we
for
cannot
now,
see the screen.
can you see my screen?
No.
All right. How about now?
No again.
Now?
Nothing.
Share screen.
Also, Romeo, back in March and April, you said that when you feel rusty, you go on the 15-second chart. What do you mean by that? Do you try to look for soups on the 15 seconds or what?
You're digging deep, huh?
Yeah,
the
deep. Telegram.
Right. Well, we will come to that. That comes afterwards. And the deeper, next week, we'll go a bit deeper into the lower time frames, right? Which is a goal of mine by itself. That is a topic of discussion by itself. So let's follow the program, right? Today we go to the daily and the 4 hour. The next week onwards, we will discuss a bit more of the low time frames. All right. So take out your coffees or juices or teas or whatever you drink, right? Take a breath, relax, and let's dive into the charts. Is the screen audible? Audible? Is it visible? The screen cannot be audible. All right?
It is not visible. Now it is, yes.
Now, yes.
Excellent. So the week before, for one shot, one kill, we had what? What was the setup last week? We had
the buys, the multiple soups.
Exactly. From here to here. Now, the highest probability setups are going to form in the anticipation of the daily candle shape, right? And the weekly candle shape. Right? These are the basics, nothing new over here, right? If you can't see a clear shape daily or weekly candle is gonna follow, then you are in low probability conditions, right? All through the lens of the open, the high, the low, and the close. The same old diagram, right? Open, accumulation, right? Manipulation, key level, and up. This is basically what we're trying to do, right? Until the 50% of the candle, this is what you're hunting, right? Whatever happens after, and for those of you who've attended level 2, this is a deeper delve into that, right? Whatever happens after the 50% of the candle, I don't care, right? As long as I got this shape of the candle, right? So I'm not looking at PD rays, I'm not looking at breakers and order blocks. I'm looking at this. Open, key level, smack into it, and then I get some sort of reaction, right? Up until half of the candle. All right. So let's go to the weekly. Last week we had a rejection candle, right? A bullish rejection candle, a doji. There's some homework for you ICT students. Go Google what a doji is, right? You might find it useful. All right. So we had a bullish rejection candle last week. What does that mean? When you see the week close like this, then what's a reasonable anticipation for the next week's candle?
Up.
Up?
Yes, retracement.
Until where?
Until some internal liquidity.
Until at least the weekly FVG, right? So
Are you specifically speaking on the high of that FVG?
Yeah.
The low of the high, right? So we're expecting it to open, right? We have an order block over here, right? And this was the anticipation given out to everyone in advance, right? Now look at the lower time frame range aligning with the higher time frame narrative, right? So range, liquidity pool, range high with a pending liquidity pool down here. There's a high chance that we smack back down into it, right? Range low, range high, smack back down with this consolidation, expansion, retracement, right? Expansion again, same size leg at least, right? And then we have this bullish order block, right? Now, I'm pretty sure, in fact, I know for a fact a lot of you had marked this breaker as an entry, right? And you got wrecked. That is for certain, right? Why did this happen?
We're in a premium.
And by the way, have we discussed this price action before or not yet?
No.
We did,
Okay.
I believe, last week, right?
This?
The entry at the lower FVG there.
All right, excellent. So why did this happen?
My understanding, price wanted to retrace in a discount to go higher.
Yes. As long as we've closed inside the breaker, right, then expect a deeper retracement. You understand? So this is the breaker. Look at the reaction it gave you. Wick, smack into it, wick, and expand higher. Get into the breaker, expand higher. Right? That's a good reaction. A bad reaction means you look for lower prices in the discounted price, right? So we have the run, right? We discussed already. And as soon as we tapped into, let's mark the weekly open, right, before anything. Weekly open. Key level, expand. If you got this, your week is over. You're done. Right? Now, if you want to continue, which is what we did, right? As soon as we hit a liquidity pool, then always take something off, right? And always consider a reversal, all right? Especially if you pair it with a higher time frame, strong downtrending market, right? Rejecting highs, breaking lows, rejecting highs, breaking lows, rejecting highs, breaking lows, right? So any pop above a high is expected to get smacked back down, right? Again, basics. So as soon as this idea was completed over here, then we abandoned the bullish bias. Until when? When does this flip into bullish?
After I run the highs?
No. After you, if you want to be bullish, right? You're never bullish above a high.
Yes, you need to be low.
No, either low or you wait for an expansion above the high, a clear break, and then a smack back down into this high, and then a similar leg, right? What happened here was we went above the high, we closed above the high, and this suckered in a lot of, probably all of you, right? Or most of you, for sure. There's some buys stuck up here, right? So let's look at it through the lens of the weekly candle, right? Weekly candle, open. We smack into a key level, right? A weekly FVG and an old high. So what do you? What's likely going to happen?
We're likely to get a retracement back into discounts.
Now, was it possible that it goes higher?
Yes.
Yes. In fact, many of the good old Twitter traders had this marked out, these equal highs. And that is the problem of looking at equal highs solely as a pattern, right? If you look at those equal highs and you pair them with this old low, right? And you pair them with a consolidation, which was broken and retraded back into. Do they look as enticing now? Does it look likely that we're going to reach into them? Consolidation, expansion, retracement into the consolidation, expansion again. So is it likely, bearing in mind what time of day it is, what day of the week it is, right? Weekly candle. And the day of the week which we've hit the key level, right? And bearing in mind also the DXY is bullish. So is it likely to reach above to those highs?
No, but I had a question.
In hindsight, yes, right? But tell me.
When you look at the consolidation expansions, do you measure the equilibrium of the consolidation as well as a PP array?
Yes, but that's another discussion, right? Right now we're going to focus on this, which is candle opens, right? So we got the bullish candle continuation, right? However, we're in a downtrending market profile. Any pop of a high has to be smacked back down. Pair that with this failure to reclaim the old low, right? And of course, the classic FVG above a high, right? Now, if you want it to be bullish, then at least you want to see this flipped into a you want to see this flipped into an inverted FVG, right? Which didn't happen. And then you go here, range low, range high, so a range above a range, right? Above range. Now, if you remember, I did call for it to go down to this low when we were up here, right? And that offered a good 1, 2, 3 before it went back up and hit the stop loss. And another one for the notes, the stop loss is usually the best entry, right? The stop loss you trade is usually the best entry you will find, right? So we had that open, smack into key level, right? If that was a lot to digest, then it can all be summarized by that, right? Open, key level, opposite. Open, key level, higher. Open, right? Open, key level, smack back down, right?
The first idea you gave, the one that failed, the one before that one.
Yes.
Is that
Yes, but
where the rule you gave us of taking everything of at 75% of the range came from? Because
it failed as an analysis, but if you were a trader, then you should have at least got something out of it, which I think you did, Adam, right? You sold over here. I saw your chart, huh? You sold.
Yeah. I made money.
You got a slice, and then it reversed, right? Now, when you have an analysis and it hits the stop loss, right? You'll notice that most of the times your stop loss is the entry, right? As happened over here, especially if you mark the time that this happened, which we'll discuss later on, which is why in the group chat, remember, I said we have the same bias, right? Now, the stop loss hit. Did I say, you know what, guys, it's going towards the stop loss? It's ignoring, they're not respecting this inverted FVG. So let's, you know what, fuck it, let's be bullish. Did I say that? No. I stuck to the bias because of this time that it happened, right? Which will be a discussion for next week, right? For now, we focus on what happened, what we said so far, right? And here's a model by itself, which I mentioned a couple of times, which is if the FVG fails, right, then target the high of the FVG. Same with the breaker, same with the order block, right? So that's what happened. And as soon as you had this close below this candle, right, with an engulfing candle, 3 a.m., displacement, and it was down from there, right?
So as a analyst, what would be in your journal? Like, what's the takeaway? Why did it fail? Is it it is what it is and you move on because it wasn't high probability, or what's the takeaway?
The takeaway is, what time did this FEG get hit?
Yeah, kill zone at 9, or I don't know.
Is that a kill zone? That's 60. That's 4 p.m. New York time over here.
Right? Ah, no. Yeah.
So if it's closing above an FVG outside of a kill zone, right? Because we know that outside of kill zones, quote unquote, we don't take trades, right?
Yes.
If you want to summarize again, because I like to simplify things, right? Again, in summary, you're looking for turtle soups / displacements during kill zones, right? That's basically what it is, right? So if this didn't happen in your kill zone, that's the first warning sign, right? This is where you would cut the trade, right? Or at least reconsider. Consider a reach to the rejection block over here, right? And then to the high. And all along here, there's trade ideas, right? Which we will discuss as well later on. But yeah, the of the review was if you're going to take away something from this live stream, right? When you watch it again, once, twice, 3 times, then the takeaway is the diagram I showed you, and I'll show it to you again and again and again, right? Opening price. Think of the opening price like a magnet, right? Or like a slingshot, right? So opening price, it slings over here, and it flies over there, right? Hitting a key level over here, it slings over here, hits the key level, and smacks back down, right? So opening price. Let's draw the diagram again. What is this? Racist trading view. No black. Ah, there you go. All right. All right. So this is the higher time frame candle, right? This diagram, this box represents the higher time frame weekly candle, right? You have an open. It smacks into a key level, and then it shoots back up. That's it. All right.
So my question is, I noticed that you're doing 1 trade a week. This is the 1 shot, 1 kill style. You found last week's trade. You said we were looking between Monday and Tuesday, but this week it was on a Thursday. Is Thursday a good day to expect a reversal as well? Or it depends on the weekly profile? Yeah, I think his shit died.
Yeah, it was 1%.
Hi, folks. Back on the phone. All right.
Did you hear that question?
The iPad died, excuse me, as you're probably watching and sweating as it went down battery, right? Let me see if I can connect the laptop. Are you guys following along so far? Is everything clear?
Yeah.
Yes.
I just I had a question while your iPad was dying. So the question was, I noticed you're showcasing 1 trade a week here, which is a part of your intraday trading plan. I'm assuming.
One trade per higher time frame candle, right?
Is this so? Are you trading intra-session here or intraday? Are you trading the weekly candle?
I'm trading the weekly candle, so
Okay.
basically, all right?
Okay. And you took a trade last week. You said Mondays and Tuesdays are good days to hunt.
Yes.
Relating to your slingshot, and Thursdays are good days because you're trading the end of the candle formation, correct?
And that is precisely what happened, is it not?
Yes.
Yeah.
Okay. I'm just making sure. Thank you.
Yeah. We'll speak of that right now. Let me just let's see if I can connect my desktop, right? I'm sure you guys prefer the desktop to the phone. I would too. Telegram web. Load the Telegram on the desktop.
Also, why did you take everything at the FVG when you shorted Thursday? why didn't you hold for next week as we were bearish?
No, I said, if you remember, what was the commentary I gave? What did I say?
Yeah, it was previous daily high to previous daily low.
Did I say that's it? I said we can expect at least the FVG,
Yeah.
right?
First
No.
target. But why did you take everything at first target?
Because I was too busy to watch the charts. It's that simple. Me personally, the reason I took it off at the FVG was because I don't have time, and you don't want to fall in the trap of trying to trade every single pip of every single candle, right? If you can get one slice, right? If you use the slingshot, right? If you can get one slice, a pound of flesh, right, per candle, then you're good. That's all you need. Right?
Okay,
if
thank you.
Try and catch every single pip of every single market, every single hour of the day, then you'll end up burnt out and wrecked. Right? There has to be some moderation.
Okay. Does the logic of your stop loss being the most likely reversal point apply majority towards turtle soup entries? Because the swing highs and swing lows are getting closer together, and your theory of that.
Yep.
Okay.
I've got a question about defining ranges. So what is it? What's your sort of minimum requirements to define a range?
Chop. There's a nice definition which I put in my in the other account, the Turtle Soup Central account. Right? It has a nice definition of trending markets versus ranging markets. Right? But visually, you can tell when it is rejecting, when it's respecting both bullish and bearish PD rays, when it's trapped between two close PD rays, right? Let's open the chart. Right.
So, I mean, the example you were going through last week in the dollar. On the weekly, you could have defined the range as being like it was broken to the upside, but that's where you ended up putting the top of the range. So weekly, if you went from like Jan to,
let me open the chart right now. See what you're saying. Let's open the chart. All right. Let's go to the laptop.
so it always looks obvious in hindsight. It's just, at the hard right edge, it's.
All right, folks, I'm back with the laptop. Is the voice clear?
Voice is clear.
All right. Is the screen clear?
Can't see the screen.
Share screen. Not my face. How about now?
No.
Not yet.
Oh,
now?
Now, yes.
Now you can see it?
Yeah.
Can you see it?
Yes.
Yes.
Yeah, we can see it.
All right. So before we continue with the FAQs, let me just finish. Touching on the daily to 4 hour, right? Which is the main discussion. Is that fine? Plus a review. So it's 2 in 1. All right. So what happened here was, this is a breaker, yes or no? Is that a breaker?
Yes. Not seeing the screen.
Do you see it now?
Yes.
Yeah.
This is an old low, right? Right, so it's an old low. I'm not using the laptop, right? We smack right into it to the pip. And before I learned ICT, right, one of my main strategies was just blindly trading all lows and all highs, right? It works until it doesn't, right? But when it works, it's pretty smooth, like this one over here, all right? Now let's go daily downwards, all right, for this one. So what you're trying to do is have a higher time frame key level, right? Like daily, and pin it down to lower time frame highs and lows, right? Market structure, pretty simple. And the whole concept of higher time frame and lower time frame is pretty simple until you go into the intraday. That's when it gets interesting, right? But over here, a rectangle, higher time frame key level over here, right? Let's go back in time. Good old hindsight, replay button. Right over here, right? So you have the higher time frame key level marked, right? Now, what do you see? Anyone who has a mic, go ahead. Imagine you don't know what's happening next, right? What do you see? This is a good way to practice the second best way to train your eyes after live market data, right, is through this replay button, right? Range low, range high, mid range. The easiest, right? Probably the most simple way of trading. Range low, range high, and it's the way I do everything, right? So you have this over here. Over here you have the first thing you do before anything is probing the market profile. Trending, ranging, what is it right now?
It's trending, I would say. On the lower
That is
time
correct.
frame.
On this lower time frame, it's trending, right? We're breaking highs, rejecting lows, breaking highs. So we expect lows to be rejected. Here's a low with a key level below it, right? As we know, lows with key levels below them or above them are good candidates for turtle soups. But we all know that, right? Here's a little more. Here's a bit more advanced piece of information, right? Which is this is a rejection block, right?
Yeah.
Rejection blocks are also liquidity pools, right? And there are a place which many retail, in fact, a lot of retail, right? Whichever of you used to trade non-ICT concepts before, you probably used to, and they're considered technically as a safe stop loss, right? For continuation trend following traders, right? However, what I've noticed is that rejection blocks, usually, more often than not, they are, you have this order block with a long wick, right? Order block over here, digging into the low. This whole rally has been sponsored by this one candle, right? This one specific candle has sponsored this entire rally. You see? This one candle, right? Order block with a long wick, rejection block. So As soon as you have this happening, right, which is also retracement I traded, as you all saw, right? So it's a rejection block and an FVG on the higher time frame, the daily, right? Slow down. Play. So we're trying to work within this one candle, right? We're trying to take it from the candle's high to the candle's low. That is a 3-candle model, right? What increases the chances of it giving us this retracement, right? Again, draw opening time of each candle, right? Every single candle has the same phenomenon happening again and again, which is open, key level, go. Open, key level, smack it down, right? So over here, this was the idea, which is smack back down into the rejection block, right? It is extremely unlikely, and go back to your charts and backtest this, right? That's your homework, is look at rejection blocks and look what happens at rejection blocks, all right? It's been a long stream, right? Not over yet, but focus. Backtest. I won't say backtest rejection block. I'll say backtest what happens at rejection blocks at the lower time frame, right? That's one thing. And backtest, how many times is a rejection block left untapped? It is extremely unlikely, right? And see how you can use that to your advantage, right? To anticipate, for example, retracements. So it's a good way to, in a trending market, right? We know that highs are broken and lows are rejected, and in some instances they're left untapped. So they're engineering liquidity for the future by leaving lows untapped during a buy program / uptrending market, right? So one way to anticipate retracements is untapped rejection blocks.
So would you consider the rejection block formed right before the one you marked out lower at 1.046-ish?
This one.
That's the one more to the left.
I mean this one.
Yes.
This one smacked into a rejection block over here, right?
Do you consider that a long enough wick to be a rejection
you
block?
enter from the stop run, or you enter after stop run, right? Everyone has been stopped out of here. That's when you enter, right? Rejection block right here. So if you ignore everything, if you ignore this stop run that happened, right, and you see this long wick over here, it's an order block with a long wick. It's not a thick, bulky order block with no wick. Order block plus a wick over here, right? Not that long to be fair, right? But a stubby, a visible base, right? It is extremely unlikely that this goes untapped, right? Price doesn't go up, and it doesn't go like up in the path. Price doesn't go up and down and up and down. No, it goes consolidation, right? It leaves behind liquidity pools for the future, right? Untapped, higher. So yeah, that is indeed an example of a rejection block. All right, so we're using the higher time frame key level and the rejection block to anticipate a retracement. We smack back into it. Now, how many of you witnessed this drop live? Like, how many of you were attending this day?
Yes, I shorted NFP.
Right. Let me raise a poll right now, because I'm pretty sure most of you are Forex traders. However, let's make a poll. Which market do you predominantly trade? Forex. There you go. You have it right now. So we smack back down into the rejection block, right? So we have the we smack it down into the rejection block, which is also blended with this breaker over here, right? Consolidation, expansion, retracement. We like to see our levels, which we mark out, hit violently, because that usually means that they're more likely to work, right? If it's slowly going towards the level, slowly just grinding towards the level, grinding, then more likely than not, the level is gonna fail, right? When I mark a level like this FVG over here, right, and it smacks into my level, then I get a lot more interested in the trade idea, and potentially even risk and reward a lot more, right? So what happened here was we smack back down into the key level. Now, a blind market structure trader would see this as a break in market structure, right? But it's not. It's a key level being hit violently with this specific one candle stabbing into an old low, right? As soon as we close above this specific candle, then we're expecting higher prices, right? Close, smack into it, and then a strong this one candle is the specific candle which sponsored the move, right? And this is an occurring phenomenon which you will see again and again. Again, we always talk about order blocks, breakers, OTEs, but they're all part of a turtle soup. Order block, turtle soup. Breaker, this shift in market structure to the upside was also a breaker. Breaker, which the candle that caused the turtle soup, right, caused the market structure shift, which happens after turtle soup. The OTE, which came also, was after this measured from this turtle soup, right? So it's all it all goes back to false breakdowns and false breakouts, right? So we smack into this key level. The daily range is exhausted, right? We close above, and this one candle is sponsoring the move higher, right? So if I was to summarize the alignment of the daily to the 4 hour, 1 hour, right? Then you would go and say the following, right? The daily key level is mixed with the 4 hour. Where's the plus sign on the Mac? Yeah. 4 hour market profile. Also 1 hour, right? If the 4 hours is unclear, then you go to the 1 hour, right? So this is your rigid rule which you apply and which you should be studying during this week, right? And as we know, the expectation was to the dollar, right? The expectation of the dollar was from last week to use this specific low to rally higher, right? To the drawn liquidity, which is up here. How it reaches there, we're going to have to see. But it's going to be a nice, interesting ride. Over here, same concept. Dig into the low, close above, and rally. This entire up move was sponsored by this one specific candle inside of the turtle soup, right? And this is a good demonstration of the concept, which is lower time frame breakers opposing the higher time frame order flow or turtle soup, right? Over here as well, we have this one by the balls or by the tits, right? Over here, one of my buddies or ex-buddies, Finesse, right? He was bearish down here, right? Why? It's a breaker. No, it's not. It's a lower time frame breaker opposing the higher time frame order flow, right? So another example over here, and the drawn liquidity on dollar is going to be up over here. If you stuck it out this far, then you deserve to get the drawn liquidity. Okay. So yeah, that pretty much wraps up what I had to say.
So,
right.
Before you go,
and
my
now
question...
we have the FAQs, if anyone wants to ask.
So, can I ask that when you're looking at your daily PD array, 4-hour, 1-hour profiling, when you talk profiling, are you talking about price profiling, not time profiling, more specifically? As in, you're looking for a range to form, you're looking for it to tap back into it through that range, or...
See, the thing about displacement and time, because time is definitely more important than price, right? Time is more important than price. However, one thing has to be kept in mind, which is displacements usually happen at the correct time, right? So if you ignore time completely, right, which is not advisable, but if you pay attention more or less to time and really understand the logic of the narrative and the order flow which is in front of you, then you'll have a pretty good read on price, right? Because the moves will always happen at the same time, right? It never changes. It can vary, but it never changes. How you interpret the move is up to you. That's your mistake, right? But there's always certain moves happening at certain times, always, right? And they're the same times.
So when you do trade a daily PD array and you're profiling both time and price, would that mean that you're profiling the weekly profile with it, meaning that you're looking for a specific day for this displacement to occur? And then that's when you break it down.
I'm looking at certain PD arrays. When I mark this excuse me, when I mark this candle that sponsored the rally, it's not a random candle. It's a candle that happened at a certain time, right? Down to the candle, right? The order block, it's happening at a certain time. The breaker happening at a certain time. The break off the breaker happening at a certain time. Everything. So I'm paying attention to that. In summary, of course, for the general populace, kill zones. That's all you need to know. Anything else?
I have a question. What does profiling actually entail? I
What do you,
understand part.
what do you mean?
So you're saying profiling the lower time frame. Um, what I would normally do is mark out the higher time frame levels um, and
Uh,
wait for certain times for
did
the
you
turtle
attend?
soup to happen. But
Did you attend the level 1?
yes,
The method. Did you join that group?
I'm not in
I
that
can't.
room.
Well, whoever's listening, if you haven't, then I would advise you, because a lot of the stuff I'm saying comes from there, right? But in summary, if you want to make the most out of this, then I would advise you to join both the method and time turtles. But in summary, it's basically probing order flow, right? Highs and lows. Market profile: are we trending
Okay.
or are we ranging? What's happening, right? And use those. In trending markets, there's a way to work, and in ranging markets, there's a way to trade them, right?
So earlier you said your entry was your stop loss. What did you mean?
No. The stop loss was the entry. Again, if you have journals, which I'm sure 90% of you don't, right? But whichever of you do have journals, and you look at the stop loss, it's one of two things that happens, right? One, it's either the stop loss is the perfect entry, right? So your stop loss, when you finally gave up, right? You were longing all the way down. When you finally gave up, it gave you a nice rally, right? So the stop loss is either the perfect entry, or it's the perfect SR flip, right? So you'll see it hit in the stop loss, like to the pip, and the stop loss will become the strongest PD array ever, right? So this is two things which happen to the stop loss level you place, and you should use this information to your advantage, right?
So you always say the entry doesn't have an importance. You only need the stop loss and the GP. But you say that the best entry is your stop loss. So how do you get good at selecting invalidation levels? Like that's the last line of defense. If that level hits, I want to see bullishness and vice versa. And you still fuck it up. I don't want to say it like that, but I mean, yeah, you understand the question.
Yes, again, the system is perfect. The system is perfect. The only error that can happen is from the operator, right? So what happened was, for example, the euro. Let's look at the euro trade, right? Now, we know that in the weekly candle, we have Monday, right? We're looking for Tuesday, Wednesday, 70% of the time Tuesday, right? To have a low and a lower high, and then Thursday, Friday to cap the daily range, right? If you see some capping signs at the end of Wednesday, sure, you can take them. London close, right? However, the basics are the basics, which wasn't paid attention to this one, right? Which is Thursday and Friday are the capping days of the weekly range, right? So the system is perfect. The only error that can happen is from you, the operator of the system. You understand?
So you forgot that we were Wednesday, or
No,
yes?
I saw topping signs on Wednesday, so I took the short, which was a decent short until it wasn't, right?
But why should you consider it a mistake if it went with the statistical edge? I mean, there were signs that over a large sample size you were profitable doing that. Why would you consider it a
As a
mistake?
trader, It's not a mistake. It's actually a win, right? If you had followed the signal, right? Some of you did, right? Then you made money with this move over here, right? And as price is moving towards your anticipation, you monitor price. You don't just sit there and let it just slide. You watch it as you entered here, for example, right? Above this high. You watch everything that happens all the way down here, right? You watch what happens at the potential reversal points. You watch everything, right? So as a trader, you made money. The signal, quote unquote, because I do not want this to be a signal channel, right? Rather a fishing rod shop, right? Not fish. But if you followed the arrow and entered blindly from the time I posted it, then you'd have made a 1 to 3, 1 to 4. So as a trader, that was a beautiful trade. But as an analyst, you didn't wait for Thursday. Thursday, Friday are the capping days of the weekly range, depending on how much expansion had occurred until that point. Right?
What do you look for to like verify you're on the side?
If you're bearish, then you look for bullish key levels to be broken and bearish key levels to be respected. It's that simple.
On the time frame you traded on, or
always pairing a higher time frame key level, right, to a lower time frame range, always, right? And this is always there. It's never going to stop working. It's always the same thing over and over again, every single time.
Question, Romeo, where do you find the range on the 4-hour chart though? If you're pairing it with the daily PDR?
Like,
is it the
it's cutting
sorry,
off.
cut it.
It's cutting off. I can hear you.
Where do you find the say on the 4-hour after you find the daily PDR, right? Where do you find the range for the 4-hour? Is it the first candle and then you wait for the second candle, then you execute on the third candle?
I don't get the question. Can you ask again?
All right. Say you found you mark off a fair value gap on the daily, right? And
right.
You're using the 4-hour for your framework, right?
Right.
The first candle that trade up into the fair value gap, which formed on the daily. Do you wait on the other two candles to form, which give you the 3 candle formation?
You
to
can
find the range.
You look for no. You have the key level. You look for the same sequence, right? Which is entry 1, turtle soup, right? So this is a key level, right? Good. Your key level. Daily key level. Sounds good, right? So on the lower time frame, some range is going to be there all the time. Turtle soup, 3 candle formation with SMT or not, right? Takes the body or the wick. Turtle soup, and then order block, and then an OTE, some sort of OTE, and an OTE is any retracement which doesn't take out the low, right, and higher. That's it.
All right. So, question again. Say the first candle trades into on the lower time frame, right? The 4-hour. The first candle trades into the PDRA, the key level you're looking for.
Right.
Is it the same concept? So you have the first candle touching the PDR, the key level. You wait on the second candle to form out to turtle soup the first candle that touches the PDR, and then the third candle you execute on.
Yes.
Okay. Appreciate it.
No problem. There was a question asked in the group, right? Which is, how do you anticipate us to reach for premium discount or not? Right. One thing that ICT has not taught is the 0.382 fib, right? And the 0.27. That is the answer to those questions, All right. So if you're listening, I think his name is Harry, the guy who has a question. It's a good question, right? So Harry's answer is that. So these two fib levels would be a good addition to your charts, which is 0.382 and 0.27 Fibonacci levels, right? They're used to measure the strength of trends. Now, in a strong uptrend, price is going to retrace to these two and skip the 50%, right? So it's so strong, they only need to retrace this much to keep going higher, right? So that is the answer to that. It was an interesting question, right? And there's the answer.
So my question is, when you look for that range formation, do you have a specific system where if you have a daily PT array, you look for, let's say, that range to form on the 1 hour chart, or do you just look for any lower time frame chart
No.
for that range of formation?
Daily is usually going to be in the 4 hour. If it's not clear on the 4 hour, the 1 hour, right?
And that's where you expect the formation of a range, a soup, and a breaker.
Yes.
Okay.
And again, like the details are cool, right? I'm known, and a lot of people probably follow me for my details, right, and my attention to the details, right? However, they're all under the umbrella of what I mentioned before, right? Open.
Is in there.
You guys hear him?
No.
No.
No. Who's asking?
I'm assuming he was going to say the same thing that he's been saying over and over again. Open, consolidate, protract, and then expand.
Can you hear me?
Yes, sir.
Is it clear?
Mm-hmm.
Right. So that is pretty much the summary of what I'm looking at through the lens of whatever I've taught you, whatever you've seen me talk about on Twitter, Telegram, wherever, right? I'm looking at everything through the lens of this open, smack into key level, high. Right? Now it's one thing to know this, and it's a totally different thing to apply it. Right? So go back to the first messages on how to apply a new concept. Right, which is something no one talks about. They all say, "Hey, you know what? Yeah, here's a strategy here." No, they don't talk about the importance of how to start trusting the strategy, and that is mentioned in the very first message of this group. Right? If you scroll up, the first two messages are talking about exactly that, as well as the first video I posted on this group. Right? So yeah.
Hey, Romeo, so the guy that asked you for when is price going to discount, I had an answer for him, but I didn't know if it was very correct. So you back in the past, you said that you gave us 4 examples that a H1 range takes 3 to 4 days to form and 2 days to play out, right?
Yeah.
So you keep that statistic in mind, or is it just for info?
It is kept in mind.
Okay, so you would take that as we will not retrace because we've been ranging for that much time.
No, that's a totally different thing, and a totally different model, right? Something different. It's not the same thing.
So, a question that I have is when you're talking about displacement happening at the right time, are you looking for two displacements? One of the displacements being the protraction into your key level, and the second displacement being towards your target, correct?
Yes,
Are those both supposed to occur at the quote unquote right time at the kill zones?
that is correct.
And is there any more that you look for? Or is that only two?
That's pretty much all that needs to be mentioned right now, right?
All right.
Also, if you see a range, a clear range that looks very hindsight, like textbook example, but it just didn't take the low or the high, and it went from the middle of the range to the high, to the opposite side. How do you learn from that? Like it happened on Euro.
That's why you mark the mid range. Right? That's the importance of mid range, and that's where you pay attention to SMT as well, right? Because that usually happens 9 out of 10 times with SMT, right? With a divergence in the market.
It happened in Friday, I think, in Euro. Look, data,
Over here,
yes.
over here, yes. We saw
Yeah.
it. And pound took the high, right?
Yes, by a mini pip, like a
That is
tenth.
correct, right? SMT. SMT is the answer. I get your question. The answer is SMT, right?
Okay, so you wouldn't require Euro to take the liquidity
No,
because Geo already did that.
That's the whole idea of SMT, Adam. Right?
Okay.
So, to get this correct, what you're saying is it's not just the turtle soup that has to happen in the kill zone. Even the price crushing into the higher time frame has to happen in the kill zone. Is
Of
that
course,
correct?
always. Of course.
Okay. I didn't know that. Thank you.
If you go back and look at the charts and see what time everything happens, right? Once you realize that everything happens at a certain time, then you it becomes a lot easier, right? So you just wait, you sit down and wait, because you know that 70% of the time price is gonna consolidate, right? So the markets, they spend 70% of the time in consolidations.
So if
The manipulations happen at certain times.
yeah.
Always.
So if price were to hit a really juicy higher time frame during a non-kill zone time, what you suggest is just to sit on your hands and do nothing.
The system says don't go near it, right? Unless you want to trade a higher time frame trade with a higher time frame risk reward, right? Which is pretty slow. You can do that. But on the lower time frame rules, no, you can't.
Thanks.
All right, folks. That is one entire hour. I was expecting less, but there you go. You got 1 hour. There's a lot of stuff, some new things I mentioned in this stream, right? So hopefully you are still awake. A few of you at least, right? And yeah, I spilled a bit too many beans this time, but there you go. You have it. All right. And yeah, that's all for today.
No more questions.
No more questions for this one. If you have any questions, you can gather them. And the way I saw Harry's question as an interesting one. So if I see, I'm reading the chat, huh? If I see any, what do you call it? If I see any interesting, collectively, like a question which is being asked and it's worthy of being answered collectively, then I'll answer it, right? Otherwise, FAQs as usual.
A guy asked about. Okay.
All right.
Go ahead, sir.
So this concludes the live stream, folks. Right?
Oh no. One last question for Guy. He asked a move that happened in gold in Friday. He didn't. I mean, nobody understood what gold did. But maybe you can give us your thought, your view on what it did.
I haven't been looking to go for quite a bit right now, but it should have bounced. Right? Let's see. Yeah, there you go. Week.
Just check the monthly. The monthly FVG is, I believe, what it
A nice hindsight, of course. Hindsight rejection block over here, right? Very nice. Hindsight monthly FVG as well, right? So, yeah. Hindsight monthly candle, 3-candle formation, right? So gold, unless there's a clear, obvious swing, I don't like touching it, right? There's like a super clear, like for example, the swing, which is going to take us down to over here and down here, right? That could be a swing that can retire you. If you play
Can you go onto the H4 because there was a clean turtle soup, but it just went up.
This one down here. I mean, again, if
Yes.
you had, yeah, not bad, not bad. Even as a blind pattern trader, turtle soup trader, you'd have got this, right? Trend range reversal, right?
No, I'm talking about the one that happened up there. Look.
Up where? Over here?
Yeah, yeah.
What's the issue?
I mean, we had a clean reaction, as you see on the H4, but it decided to pierce through it on Friday.
Over here?
Yeah. I mean, I expected it to be like Euro and Nasdaq and every other pair, but I mean, it's gold. What was I expecting?
Exactly, right? Gold is what...
For me, I look at the gold futures. It's a lot cleaner. It was simply respecting a daily or a monthly FEG on the daily time frame.
Yeah. Yep.
If you look at GC1.
I don't pay that much attention to gold unless it's like a super clean swing, as I've said before. So I don't know. This is not something I'm looking at, right? Trying to catch this is not my, it's not my thing. And if you're into that, then up to you.
Also,
however,
why
it does have a nice weekly close, right? So that could be something to look for, right? But I'll only touch gold if it goes back above these highs, right? If it stabs back up here and smacks back down here. Anything else, I'm uninterested, right?
Also, why did you deem indices as low probability for the past 2 months? Why?
Because let's see, Nasdaq had a projection for Nasdaq. Whoops! Oh, that was not supposed to be seen by anyone, right? That was not supposed to be seen by anybody. Yeah, Nasdaq is looking good. Nasdaq is looking. Again, it was.
It's a hell of a swing trade.
Right. The indices, yeah, they're. I don't see anything clear, to be honest. Right. So I prefer to leave them alone. If there's a clear 1 hour, 4 hour daily swing, like the last time I looked at them and I had interest in them was down here, right? And you can see why, right? Is down here below these lows and over here, and that's it. And over here as well. And this was the last time I found them interesting, right? So these are the points at which I was looking at the indices, right? And within them, of course, you have more. So yeah, for now, I don't know. It would seem
You
like
stick to Forex,
yeah,
to Euro especially.
yep. It would seem like this is the next move for Nasdaq, right? Goes over here, and it smacks back down into these equal lows, right? Had it marked out. I totally forgot about that. Right? That seemed like an opportunity. With this being your line in the sand, right? So yeah, there's a free Nasdaq analysis for you. Anyway, folks. Of course, if it works, I go and boast and brag. If it doesn't, then I ignore it as usual. Anyway, folks, thanks for listening. Right. And my apologies for any inconveniences caused, but I had to. Right. It was not time sensitive, so it's no big deal. Right. And have a good week. Don't trade Mondays. Right, unless it's something super clear. And if I see anything interesting, I'll let you know. I'll let you know in the group chat. All right, as usual.
All right.
And good luck and good trading. And if you have any questions, then let me know in the chat. And if you recorded this, please send in the group. All right, because my iPad died, and whatever recording I had has been lost. All right, so hopefully someone has some recording of some sort, which I'm sure you do. Rabbit Man said he would record, right? So
Yeah, I think he did.
Yeah. All right, folks. See you all in the next one.
Okay. Goodbye, Mr. Romeo.
Bye-bye. Although it's not a time-sensitive stream, right? You can rewatch this afterwards. So I'll start at 5 in 7 minutes. We've gone through the monthly to daily and the weekly to the 4 hour, right? We've also gone to the daily and the 1 hour. Now I'm gonna push back the 4 hour and below to next week, all right? And today we'll discuss, we'll review the market and what happened last week. And then some FAQs, and then I let you all go. All right? So stop whatever you're doing, grab your coffee or tea or whatever you drink, and
Hello, Romito.
how's it going?
How's it going, my friend?
How's it going with you?
Alhamdulillah. I was going to ask, are you going to record?
Hugo has said that he'll record. All right? If someone else wants to record as well, then go ahead.
Okay. Thanks.
All right? It's always better if there's multiple people recording, because if one messes up, right, then we can have some samples to select from. All right? Vikash Kumar. You've been doing good, huh, on Twitter? I'm seeing you. What is he, shy? Okay.
No, I'm not shy.
Okay. All right. Let's get some more people. Now, folks, I've been seeing the chat is getting a bit messy, right? Which is why I never wanted to open on it to begin with. So are you guys finding it useful, the chat? Because if you are, then it's a good idea. But if it's not being beneficial to most of you, then it is merely a distraction which has to be removed. Right? So what do you guys think? Is the chat good, bad?
I don't think so.
Is the chat good, bad?
I don't think so.
What are you guys sleeping? Wake up.
Hello, Roman. How are you doing?
How's it going?
It's beneficial.
Hello, Roman. How are you doing? Thank you.
Let's go. One by one.
Hello,
Roman.
okay,
How are you doing?
but,
Thank you.
One by one. One by one. One by one.
Yeah, actually, I want to thank you too for your all teachings. I'm like from the level 1 learning from you a lot of things, and I want to ask you about your fundamental and sentimental analysis, how you do and what you look for.
You're welcome. Yeah, level 1. It's been a nice ride. But I'm afraid the educational part of the ride, as far as what I'm willing to share to all of you, is soon to be over. Right? But there's more than enough, to be fair. That's number 1. Number 2 is sentiment analysis. You have the good old news is an important one, right? Because the news is a mechanism used by the people, the market makers, to build sentiment, right?
Yeah.
So watch the news. It's important. Don't ignore the news. But watch the news to know what not to do, right? It's actually pretty accurate if you pay attention to the type of news that comes at swing tops and bottoms. A recent example is, if you guys remember, when MT4 was removed from the store. Remember? Oh, it was trending.
Yeah, during the war, I think Russia and Ukraine.
MT4 was removed from the Apple Store, right? And then there's like these memes of selling iPhones, which had MT4 for higher prices, right? That happened at the dollar high and the euro high, right? So from that news, that scary forex trading is crashing news, we rallied a couple thousand pips, right? For example, that's one example of many of how to fade the news. Now, by itself, it can work, but it's hit or miss, right? If you blend it with a sound, logical, technical analysis, then you can get a pretty accurate reading on swing highs and swing lows, swing formations, right? Which means we're not going to see these prices for a long time, right? On the higher time frame, the daily, the weekly, the monthly.
Thank you very much. Thank you for your answer.
No problem.
Hey, Romeo, had a question.
And fundamental, the other part is keep an eye on the interest rates.
Okay, one more question related to gold. I mostly trade gold, and that's why, for example, like nowadays, like war coming in Ukraine, now they're happening, and I mean Palestine and Israel, and I think it's more related to like more like political and stuff like that. I mean gold.
Uh-huh. Yeah. When it closed, last week's close above the previous week, right? And that was an indication for rally, right? I didn't mention it. I marked it on my charts, but I did not mention it in public, right? But again, I'm a firm believer in that the charts will tell you the news most of the time, right? Even you have some great technical analysts of their time, Gann, right? He would predict world events based on the charts of wheat, of beverages, food and drink, milk, sugar, even ICT, right? He mentions the charts of commodities, right, as a way to predict the future. Now, do I believe in that? No, because I'm a Muslim, and in Islam we don't believe in predicting the future, right?
Yeah, actually.
However, you can have a fairly accurate read on price, and that's all you want, right? We're traders. We don't give a fuck about the war. We don't give a fuck about the news, right? We just want to extract some pips from the market. That's all that matters, right? You want to catch some percentage move. That's all.
Okay.
The strict
Yo,
professional.
Hey, Romeo. Zubin here.
Ibrahim asked to be unmuted. He has a question for you.
Tell me. Who?
Yeah. My,
Ibrahim, the typical Ibrahim.
So my,
Typical of life. There you
my
go.
question was, relating to war and news based on price action. Could we make a fair guess that oil could be potentially bullish here, or could we use that as a sentiment check?
I haven't seen the oil chart in a while,
You
right?
should take a look.
So let me go and let's go and see what it says, right? But at the end of the session, right now, let's focus on the weekly review, right? Let's
my
review the
question.
week that
Yeah,
was. Tell me,
yeah.
Jubin,
Sorry.
there.
Yeah. You got it right. My question was very simple. In all of your videos, you just show one picture of the open, high, low, close, and you say that you see everything through the lens of it, right? But to actually do that, you need to have a very high probability of anticipating the shape of the candle. How do you do that with a very high probability?
Okay. So how do you predict the shape of the candle, right? I've given out a few hints along the way of how to predict the shape of a candle, which comes after which candle.
Correct. That is the
Yes,
same
I'll
as
speak about
the
that as well.
doji is a consolidation. The large candle is an expansion. The rejection candle is a reversal. Right. The same thing.
Yes, that's one small part of it. There's more to it, right?
Will
There's
you
a
be
lot more
teaching
than
that?
just that. Yes.
Okay. And the last question was regarding the four shapes of candles, so the sequences. You said that when price closes below the candle, then it is a
Was it four? Or
continuation.
was it six? Was it four? Or was it six?
It was six candles, but only four circumstances, right? The dojis are the same.
Right.
Yeah.
Right.
And you said that when price closes below, it's a continuation. So my question was, does it have to close below the wick or the open of a previous candle?
Below the.
Can you come again? I think your voice is breaking.
Every
Yes.
single move of the market, right?
Sorry,
Is my
Romeo.
voice
I
clear?
think we can't hear your voice.
Is my voice clear,
Yep.
folks?
Now it's clear.
Okay. So I was saying a common mistake many of you have probably made is trying to predict every single pip move, every single market, and trying to force it into your model. No, your model is going to come a bunch of times out of 10, right? That's all that matters to you. You're not trying to force your model. If you try and force it and understand every single pip move of the market and try and catch every single move, you're going to get wrecked. You're going to win, you're going to win more, and you're going to end up giving up all your profits, right? Because you're not focusing on one model with sound money management. You're just gambling, which is 90% of traders, right?
Yeah. Yep.
So that's referring to you saying, is it the wick or is it the open,
Correct. Yeah.
right?
Yep.
Okay.
It was because that
We can't hear
usually
you.
yeah, it was because usually I think an ICT said that it has to close above the opening price for it to be an order block. While
Can't hear. It, is my
I think
voice
we can't
clear,
hear you. Nope,
folks?
your voice is breaking.
Voice clear now?
I think if you speak a bit more,
No, no, it's clear. It's clear, man, I guess.
is it?
It,
Okay.
is it clear now?
Yeah, I think so. Yeah.
Okay. Okay. So I'll speak a bit about the review of this week, all right? Which is the main topic for today. I said that we'll push back the 4 hour and below into next week, all right? And today we'll have a market review, okay? Plus some FAQs of the most frequently asked questions. You can use the chat right now if you have any questions, all right? And I'll go and give a peep and look at the most commonly requested ones, which are relevant, all right?
Yeah. So I had a question, if you don't mind. So my question is, do you look at time before
Questions
you
come
even
afterwards,
look at
right?
any of the PDRs? Yep.
Questions come afterwards. Sounds good. Let me just finish let's just wrap up the review right now. Okay. Okay, so we start right now. Do you see my screen?
No.
No.
Nope. Nope.
Okay. How about now?
No.
No, I can't see.
Can you hear me, folks? I think it cut off, right?
We can hear you.
Can you hear me now?
Can hear you.
Yes.
Can't see the screen.
Okay. I'm driving, so let me just park the car somewhere. because the house is being cleaned right now. It's a bit noisy, right? But you guys get the stream anyway. Let's go. All right, over here. Okay. All here?
Can't say anything.
Can you hear me?
Yes.
Can you hear me? It's cut.
Yes.
It's cut. All right. Let's start right now. Let's go. Share the screen. You can see it now?
Yes, yes.
Okay. So I've seen that most of you trade FX, right? So I'm going to go over the Forex market and a skim through the crypto and the index markets. All right. So we have here the dollar, the benchmark, the big daddy of all the currencies, he who controls them all. All right. Now the dollar, what's happened here is, right, range low, mid-range, and range high. Right? It's always a range. Now, one important thing is when you're looking to find a trade, then you're always looking for a one-sided movement, right? So what that means is if you can frame two directions for price to go, then it's better that you stay out. Down here, there is only one place price could possibly go, which is up, right? Which is why you were worn down here. Guys, dollar's bullish, right? Same over here. Guys, dollar is bullish, right? So as we speak, we have now broken out of the range high, right? Which means dollar is bullish right now. However, one thing is we have hit a major target on the higher time frame, right? Now what happens when that happens, then we can expect a lot of chop, remember? So if you go back a few videos, I told you that when euro hits that main target, which it had, then you can expect a nice chop fest, right? And that is exactly what happened, right? However, I think it's reasonable to expect that the DXY will at least draw up to here, right? Range low, break out of the range, retest the range high, and then we rally up to this buy side liquidity up here. Right, so that's my draw liquidity on the dollar. Proven otherwise. Plus, we've had a strong uptrending market, almost zero corrections, right? With zero down close candles during the entire last quarter, right? So we can expect some sort of chop, right? That's the weekly, and that is the monthly. The monthly, however, right? We are in this FVG as we speak. However, we're closing inside of it. You see that? So we went from wicking to closing. So it is showing dollar strength at the moment. And it looks like the dollar is going to leave a monthly FVG for next month. And perhaps that will be the FVG which we can use to target the buy side liquidity, right? Something like that, I would think. Now, going down to the daily, range low, range high, very basic range trading theory, right? Range low, range high, mid-range. Now, what have you been told about the mid-range? Any volunteers to answer?
You don't want to be trading the mid-range.
Exactly. Now, look at what happened over here at the range low, and how clean the price move was, as opposed to mid-range, right? This was last week, right? The fact that we could even extract some trades is a miracle, right? Because if you can trade a choppy market, then that's... See, anyone can trade a trending market. Even in crypto in the year 2021, right? Everyone was an expert. Why? Because it was a strong uptrending market. Same with 2020. But as soon as you get a choppy market, then that is where true skill is honed, right? So mid-range, we refuse to engage with dollar except at the range extremities over here, which we did. And next is over here. So let's take a dive into last week's price action. All right, DXY. And I have some notes over here. Oh, what's this? That's my review. Let's remove it, right? Remove these drawings. Okay. So the week closed with an FVG over here, right? So what you do is mark the key level, right? The order block over here, opening price, and the FVG. So it's an order block plus an FVG, right? Now, before any weekly candle opens, you want to mark 2 key levels and write this down. You want to mark before the week opens. You want to mark 2 opposing key levels, which may mark the weekly high and low, right? If you're bullish, weekly low. If you're bearish, weekly high, right? Now, if you're strongly bullish, then only mark the bullish one, which will mark to you the low of the week, right? Because, again, basics is we're trying to trade in the direction of the weekly expansion. If you can frame a high probability weekly expansion, right, then that is the type of market you want to trade, right? Anything else is forced. Now, based on the fact that we've hit a higher time frame target, we can reasonably anticipate, with a voice crack, we can reasonably anticipate that there's going to be some sort of chop, right? Chop meaning inside candles. And that is precisely what happened last week, right? All that movement where it's hitting both buy side and sell side again and again, that is basically an inside candle, right? And these are candles you want to scalp, right? So these are scalping market conditions, right? Not trending swing conditions for now, right? So before the week opens, you're going to mark the place you expect the weekly low to happen. All right, in this case, we mark the order block. 4 hour. Right, so a higher time frame key level with a lower time frame market structure, quote unquote, right? Which means market profile, resisting highs, breaking lows, right? You got this, rejecting lows, very clean. This one candle, this one specific candle is the one that caused the expansion, right? You see that? This one over here, right? Close above. This one candle is the one that caused the expansion. So you have your key level, right? 4 hour, you got the breaker over here, and you got a 1 hour FVG. Now, when you see these imbalances all over, right, then we know that every single price moves for 2 reasons. Can someone mention the 2 reasons why price moves?
To rebalance, imbalance, and run highs and lows.
That's it, right? So when you see all this inefficient price, you can expect a repricing, right? At least guaranteed to the over here, first one, and potentially to the lower gap as well. And what's the only reason you would expect this gap to remain unfilled? A bunch of reasons.
If there's a higher time frame breaker block,
or same time frame breaker block, right? What else? Like why do gaps remain unfilled, right? Revision. Why do gaps remain? When do gaps remain?
So due to, I think, due to balanced price ranges, SMT, and high time frame PDRA, and also the mitigation block, like the sell side of the curve, you can reach out to the buy side. Yes.
These are the main reasons gaps remain unfilled, and you mentioned most of them. Vikash, right? If I'm not mistaken. Any other reasons, which they are, right, are secondary. But the main reason, when you see a gap like this, right, then you ask yourself, is it going to be filled? Yes. Why? Because price is always going to rebalance and imbalance. When shall it not rebalance, imbalance? These circumstances, right? Breakers, SMT. So dollar will fill this balance, will rebalance this imbalance, and euro won't. Do we expect euro to rebalance? No, we say it's an SMT fill of a gap, right? So we're expecting a price to go back down, right? Range high again, range high, range low. We smack back down, right? We haven't hit the key level yet. Now, do you get bullish here or bearish? Right here at this instance.
Bullish.
You get bullish or you don't get bearish, right? If there's not enough reason to be bullish, then at least you're not bearish, right? Because if you're bearish, then what you get is that, right? Beautiful. Now, what's missing on this chart right now? Who can tell me? Something missing.
time.
Yep. Weekly open. Weekly close. These are fixed values, right? The open and the close are fixed values. And the high and the low are in between somewhere, right? Before every candle, open, close, fixed, high, low, variable, right? Variable with some indications of where they're going to happen. right? Now, the diagram, which I've mentioned before, and I'll mention forever, right? Every single stream, which is which one?
Open, high, low, close.
Yeah. Which is this, right? This is the lens at which we are looking, through which we are looking at price, right? Open, open, key level, and bounce, right? That is basically what we are trying to do, right? Open, key level, bounce. It's that simple. All right, so Monday, we skip Monday, right? Tuesday comes, and then at Tuesday, now in a trending week, right, you can blindly just buy on Tuesday, buy Tuesday at 3 a.m., right? And exit at Thursday, right? However, we're expecting a chop fest, so monitor price, right? Open, key level, bounce. Now, I had come over here and spoke offer retracement, and over here confirmed that this is indeed the weekly low, right? On Twitter, on the Turtle Soup Central account. And it was indeed the low, with a case of multiple touches of a key level. Now, here's another extremely important aspect, which is I call this as the weekly low, right? It gave me a bounce from the previous day's low to high. And then it came back down over here, right? It came back down, multiple touches of the key level, right? And it continued higher. So is this a success or a failure in your eyes? It's a success, because if you can catch a portion of the weekly candle, a slice, you're done. If you can catch a slice of the daily candle, you're done, right? That's all you're trying to do. Right? If you can catch the diagram, which is open, key level, if you can catch this bounce consistently, that's all you'll ever need, right? So it was a decent performance, especially for such a chop fest of a week, right? That is looking at it from the angle of the open, high, low, and close on the weekly chart, right? A breaker over here, right? And the gap. So the expectation is that this is the gap that will lead up to this buy side liquidity pool over here, right? In the upcoming weeks, especially now that we've had an inside week, right? The price is contracting and is then going to expand, right? The expectation, my expectation, is that we expand higher based on what happens on Monday, Tuesday next week, right? That is my expectation. An alternative scenario, right, which also have my eye out for, is the good old weekly gap we've had marked for the past couple of weeks, right, over here. This candle is the line in the sand for dollar bullishness. Right? This candle's low is the line in the sand for or the bullish dollar. If we close below this line, right, then we can expect lower prices. As long as we don't close below this line or we wick below it, then we are bullish on the US dollar, right? And observe how this inside week is going to lead to a massive volatility in the markets, right? So that was the DXY. When it comes to euro,
Sorry, Romeo. Adam is asking if he can speak. I think he's muted. I think he has a question.
this we had a couple of trade ideas on euro, which formed last week, right? At these key levels, right? The gap, the breaker, that was one. High, low, higher high, lower low, breaker, right? There was no reason really to have this gap remain unfilled, which is why we stuck to the bias when it tapped into the gap. So this was the high of the week, and it was indeed until half of the week was over. Remember the model, which is the high and low of the week until 50% of the candle, right, of the time. So this was a pretty good example. And then this breaker, lower time frame breaker, turtle soup, and up we went. Now, Friday, should I review Friday? No, Friday is going to be a lower time frame teaching. So I'm going to leave this Friday, right, for next week. Because then it's delving into the topic of 4 hour and below, right? So from the lens of the weekly time frame, you got the open. You got the open here. You got the close. And you got your key level you mark below and above, right? And that's all you do. Open, close, key level, whatever happens, you take it from one key level to the other, right? Key level and key level. Right, so this is the weekly candle, which we don't expect it to surpass this range. And the same thing can be done with any candle, whether it's daily, as we did on Friday, right, over here. Or even the 4 hour on low time frames. And notice the importance of SMT in creating the candles highs and the candles lows. Right? Excuse me. And those are the colors for the rest, right? Notice the role of SMT at the highs and the lows. And the same exact thing happens at the intraday highs and lows, right? And that marks the end of this review. Let me just also talk about the expectation of a bearish euro. It wasn't reasonable this week to expect a massive expansion into this drawn liquidity yet, right? Because the candle is still shaping itself. We've rejected this candle's low, right? So we'll see what gives. We've caught this entire move from up here till down here, right? Right now, for me, this is it's not an unclear market. It's a choppy market, right? So there's not one specific one-sided move I can see, which is why instance, we scalp intraday until a higher time frame one-sided bias is clear. All right. And now it's time for the questions.
Sorry. I think Adam had a question and he's muted. He was asking.
Go ahead. And try and have the questions be interesting, right? So it benefits most people listening, right? Because I know there's a few of you in here who are quite advanced, right? So the questions you ask don't really benefit the other people, right? So try and be inclusive, right? Let's not discriminate.
So my question is, you said that SMT tends to form at highs and lows, right? So
yeah.
Could you explain or give your perspective on the large SMT we're seeing between EU and GU right now?
EU and GU. That one over there.
Yeah, on the 4-hour profile, I believe.
4 hour?
Yeah.
You mean this one?
Yeah.
SMT refers to asymmetrical market conditions, right?
Mm-hmm.
So if you can determine one direction from the SMT, right, then trade it. But if you can't, then the markets are in a low probability condition and you just leave them alone, right? Right now, all I can see over here is you smack into this and you see what happens over there, right? So the draw liquidity would be up here, right?
Yeah.
That's all I see.
And that kind of counters your bias with EU, so this is why you would stay out.
Yes. Also, with dollar being bullish, right? If I see that GU is going to trade upwards, and the dollar is also bullish, right? Then that's either a flaw in my analysis, right? Or it's simply asymmetrical market conditions, right? There's no one-sided move I can see right now.
But you would still trade EU with knowing that this is going on, right?
I will scalp EU. This is a 4-hour SMT. Its implications are on the 4-hour, right?
Okay.
It doesn't affect the 1 minute and the 1 second SMTs that form all the time.
Okay. Okay. Yeah. And I think Adam is asking to be unmuted. I'm not sure.
Yeah, but yeah. Adam thinks too much. Let me see. Let me consider unmuting him. Where is he? Adam. Where's Adam?
I posted a question in the chat about figuring out what the confidence is of getting up to the top of the range from the bottom.
Excuse me. Yes. Adam is over here, allowed to speak. Nice profile picture, Adam. Looking fresh. Let's see. Where is he? Ah, there you go.
Yes.
Okay.
Hello. Sorry
Let's
for
go.
the harassment.
No, it's fine.
So the most chaotic question was the closest thing you gave us. If it close above, then we bullish, then and so on.
Yes. Oh, there you go. Beautiful.
And you just said on the DXY the review, you said that FVG is the last is the line in the sand, and you said that you don't want to see any closes below it.
Right.
Do we need to? You don't want to see weekly closes or daily closes? Give you some something to be aware of.
Weekly, because the daily close above or below weekly level can be a turtle soup. All right.
Yes, but if you're waiting the whole weekly candle to close, what I mean, when are you going to trade?
You're gonna trade the next week in a one-sided, clearly one directional market, right? Not trying to gamble every single candle you see.
Okay, so that was the question, but on that example, so when you said that thing, people were asking that question like, let's just say it didn't close above the high, so it's reversing.
Right.
And you say that multiple closes above a high can be sus.
What do you mean?
So let's just say we're bearish, and multiple and like three candles.
Here's an example, and you're asking, Adam, you're asking about ranges and when to differentiate between a true breakout and a false breakout, right?
Exactly.
And there's some confusion in the number of candles, and how do you know if it's a real one or a fake one, right?
Yes, and how to know if it's sus or it's okay?
That will be discussed in depth next week, right?
Okay.
So I have it in mind, which is also the question of what's his name, the guy who asked about the ranges question.
I think it was the beats working there.
Yeah.
I have no idea, but in celebration of Link as 1 week dinner, right? One week worth of dinners, right? So good for him. Even though the intention was never to give you all signals, right? Rather just show you how I read price, right? That's all I'm saying. However, this was an extremely clean range, which I've been watching since last year. Imagine, right? So it's a 1 week range. I was watching it all along here, even before I came on Twitter, right? I came on Twitter in October, and I was watching this range since here, right? And I had marked this range low and range high out. And finally, it reached one end of the range, as you can notice. Any type of trading you try to do mid-range was pretty much fruitless. Right? First, we don't trade the mid-range. We only trade the extremities of the range. And if you do that alone, then you'll see your win rate increase massively, right? If you only stick to the ends of the ranges, right?
Romeo,
Because
Romeo.
there's always a ranging market.
My problem is, bro, is trying to find the ranges. All right, so what I've been doing is if price break above the, let's say, the buy side, right? The candle that close above,
Right.
should that be considered as a new range? So if I mark out the high and low of that range and then look for a third swoop on the lower time frame.
First of all, you have to keep in mind the narrative and the context of the higher. It's boring, yes, but it's extremely necessary, right? Because without the higher time frame, you're gambling, right? That's one thing. Another thing is, if you can't see the range clearly, then there is no range, right? Then you're trending. Over here, let's go back. Now, is this clearly a choppy back and forth market? Can you clearly define the range high and low?
Yeah.
Another mark of a range, right, which is worth considering, is having equal highs or lows at one end of the range, right, which you can aim at. Right. So here, for example, you have 1, 2, 3, 1, 2, 3. You wait for one side, right? You go ranging market, 50% key level, right? The 50% is a level which lead the opposing ends of the range, right? Here you got a trend within a range breaker, low, high, a high, low, higher high, close below breaker, lower low, right? So as soon as this happened, right? Basic range theory. Are you bullish or bearish? There's zero reason to be bearish down, right? And you have the range marked out for quite a while, right? The time it takes for the range to form is one aspect, and another one is the timing of the range. When did the range happen, right? And are you in level 2, by the way? You're Austin, right?
Yeah.
Austin. Yeah. You're in level 2.
Yeah.
Have you watched it?
You have.
All right. Well, the answer is there. Right. The timing of the range and how long it takes for the range. Two important aspects. Right. Because if you apply the range theory on the higher time frame, the quarters, for example, right, then each quarter is being used to generate interest in the market on both ends, right? And then you flop the table to one side, a false flop, just in order to push it back to the other side, using the same interest which you've generated across this period of time, right? And if you open the higher time frame candles, you'll see why this makes sense, right? So you got this, and the best opportunities. Again, here's another thing, right? You don't get many entries in a price leg, right? You the best entries you'll get is only 2, right? But number 2 is part of number 1, the order block, right? So the best entries of any price leg is going to be the turtle soup / order block, right? Because they go hand in hand. The candle that stabbed into the lower high is the order block, right? Is the turtle soup. So in any price leg you're expecting, so you expect link to go from here to here as we did, right?
Yeah.
There's 2 entries I'm looking at. One is this over here, right?
Which is the turtle soup.
And the second is an OTE which will form. Excuse me. So manipulation, that's my entry. And the second entry is a strong, violent retracement, right? Which will happen at a key. You understand? So you got this?
Yeah.
There you go. Entry 1, done. Now, I don't enter, I let the expansion happen. There you go, expansion happened, right? Over there. And now we have formed a key level. Yes or no? Over here. You agree? Key level. And now I'm refusing to engage until it taps into the key level, right? So entry 1, entry 2, and I've reached my objective. All right, that is on a single time frame. You can play around and find more entries in the lower time frames, but on a single on a price leg on a single time frame, there's going to be 2 entries: the high itself and the OTE. That's it.
Okay.
Guy,
How do you anticipate?
Go ahead.
You're saying?
I was just asking, how do you anticipate after the turtle soup, how long it'll take for it to reach terminus?
That is when you slap on the data ranges, right? So if you go back to a USD CAD trade of mine I had a couple of months back, I think 2 months ago, right? Refer to it and watch the IPDA data ranges episodes. They answer your question, all right? Which is basically just looking back to cast forward, right?
Okay, thank you.
No problem.
A guy asked,
Has
where would you put your stop on that trade?
A guy asked what?
Where was your stop at this trade, at this manipulation link?
This one.
Yeah, the chain link. Was it a blind stop or some secret method entry stuff?
You're right. You're funny, Adam. It was both. However, a very basic method, right, of entering is a blind 1 to 3, right? It rarely fails, and it'll increase your win rate massively, right? Just a blind manipulation. Is the logic there? Is the time there? Has the accumulation happened? Right? A blind 1 to 3 is all you need, right? Yeah, pretty much.
So my question is,
Tell me.
I want to come back to your risk management protocol, which you say you take 50% off at the high that took the low, right? And then you take another 50% off at the 50% of the range, and et cetera, et cetera.
That is correct.
How do you calculate 3R and have a consistent risk when it comes to it varying so much depending on how high that high is?
But it doesn't vary, right? If you're, it depends on your system, right? That's my system, the one I trade. But if you, everyone has their own system when it comes to managing risk, right? So you can be a higher time frame price-like trader, and that's it, right? You have a fixed risk due to your entry model, which is a higher time frame price legs, like this one. So it's always a range, and it's always 1 to 3, right? My personal risk management and my personal entry methods, which I use, right? That is something which will unveil itself eventually, right? But yeah, when it comes to the protocol, nothing new. It's partials at the important highs and lows, and runners. There's no fancy magic secret. Not today.
Hey, Romeo, do you validate an order block if it closes above the wick or the body?
Above the candle.
The candle's wick or the open? Sorry.
No, the entire candle.
Okay. See, so you're saying you
If-
want a body to close
Yes.
above the entire candle.
If for some reason I'm expecting a massively trending market, whether it's seasonally, whether it's S&T, whatever it is, right? If I have strong conviction that there's going to be a strong trending market, then I can consider the body, right?
Okay. In this instance, in chain, which one would you consider?
Which one?
In the current example, the down close candle with stabbed into this liquidity pool.
This one.
The high or the open? Yeah.
As soon as this happened, then this one specific candle was responsible. So it's an order block with an FVG inside of it, right?
Right.
Always good to see, right? An order block. We displace above it. We smack back down into this one specific candle. And this one candle is the candle responsible for the expansion, right? Right over here.
Right.
With the ability of using the thrust candle as a stop loss over here. I had this candle, the candle that disrespected the FVG. This is stop loss, right?
So you mentioned 3 landmarks that you look for to tell whether it's going to go from range low to range high.
Yes.
What are they?
Number one, taking out one end of the range while leaving the other end untapped. Easy, right? Number two, a deep retracement that happens after. So it's 1, retracement, 2, symmetrical. Remember? Consolidation, expansion, retracement, expansion, right? Similar price legs. Again, beautiful example. And the third one is tapping into the 50% of the range. And that is See, what we're doing is trying to catch explosive price legs, right? And one way to do so, using range theory, so one way to catch massive trending price legs, which are more often than not range breakouts, right, is you wait for them to smack into the 50% of the range and then smack up higher, right?
Yep. So
that happened on the Euro 1 hour range as well, right?
So if this had not got to 50 before retracing, would that risk taking another low below the bottom of the range?
Say that again.
If on the link example, if immediately after it reclaimed the range, if it didn't get above 50% before retracing, would that be a warning that it was going to go back below the bottom of the range again?
No, because then you have the line in the sand being this one specific candle over here, right?
Okay. So you would basically, if it went and made a lower low, that would be a loser.
Yes, extremely unlikely, but yeah, it'd be a loss. Right?
Yeah.
Okay. And wonder and ask yourself why it happened. More often than not, when you're wrong on your when your stop gets hit, right? It's either one of two things: is you do not have the higher time frame bias in mind, or you're being a greedy bastard, right? Trying to catch some mega trade, 1 to 10,000 risk reward, right? So always be reasonable.
So a question I had for when
Go
you
ahead.
said before the week opens, you choose 2 PD arrays, one being higher, one being lower.
Right.
Do you always use
That's
daily
in a consolidating
arrays?
market. If it's a trending market, right?
Uh-huh.
So if you're expecting a trending market, then you mark, but before the weekly open, you mark the trending PD array, right? So if you expect a trend versus a range, right? Before it opens, if you're bullish, then you mark one bullish key level, right?
Mm-hmm.
And here's the open. Before the week even opens, right? And then you go, snack into it, and that's it. If you can catch one of these or a couple of these per month, you're good, right? You have no more models. You'll never need to learn anything else ever again, right? If you can master doing this, which is catching one of these weeks a month or a couple of these days a month, right? That's all you need.
Okay.
If you're in the ranging market, then you get this daily. And then, as you saw, you go down to the 4 hour, the 1 hour to see what you can see, right? When it comes to market profiling and market structure.
Okay. And do you use both of those PD arrays, those key levels in the ranging market for pre-trade, or do you just not trade it?
What kind of market is it, Ibrahim?
Ranging market.
Okay. And what happens in a ranging market?
We chop, we consolidate, we buy the lows, and we sell the highs.
A ranging market is a market trapped between two PD. So there's two key levels close to each other, right? And both are being respected. There's not a clear disrespect of one PD array versus the other, right? So if you know that it's stuck in this range between these two key levels, and I hear someone typing furiously, right? I don't know who you are, but keep it up, right? Yeah, you're gonna play the bounce from key level to the other key level, right?
Yeah. And you're not playing the entire expansion leg. You're playing the
No,
bounce.
it's a portion. If you can catch a portion of the candle, you have succeeded. You understand?
And that's why your risk management is the way it is. It's because you're not trying
That
to
is
catch
correct.
the entire leg. Okay.
That is correct. In fact, I saw some goofballs on Twitter saying, "Oh, hey, you know, it didn't hit the last." I posted a 1 to 5 risk reward trade, right? So it reaches 1.45 RR and reverses, right? And they're like, "Hey, it didn't reach 5." That is a sign of a non-trader. If you plan out a 1 to 5 trade and it gives you 1 to 4, that is a success, right? If it gives you 1 to 1, it's a success. You understand? Study why it didn't give you the whole thing, because most your stop loss and your take profit are 90% of the time based on greed, right? So it's always a healthy practice to remove and allow the stop loss to breathe and to lower the targets you put, right? Because it's human nature. We're humans after all. I'm pretty sure all of us in this group are humans, right? I would hope so. So it's in our nature to be greedy, right? Especially when
Romeo, before you go off, can you
take.
go over ES and NQ?
Yeah, sure. Although I've been staying away from them, which is not correct because they've been trending pretty trendily. Is that a word? No. But from the last week's review, a lot of you should have been selling this week, right? And I'm sure a bunch of you did, right? So from last week's review, the index futures were not looking good at all, right? Nice retracement, right? So
We can't
this
see
was
your screen, by the way.
Can you see it now? Can you see my screen now?
Not yet.
Can anyone else see my screen?
No.
No?
No.
Oh,
Okay. Share screen. How about now?
Not yet.
Now?
yes.
How is it?
Yes.
Yes?
Yeah.
So NQ, right? I reviewed it last week, right? I gave a look at it rather last week. The only times, and here's a nice example. If Austin, you're listening, right? The only time I had looked at NASDAQ was over here, right? On Twitter, and over here last week, right? So I didn't come here, which was also a good opportunity, by the way. But I didn't like it, right? So over here, the range high, range low. Nothing else comes close. And the draw on liquidity for NASDAQ, although it has been hit on the E-mini NASDAQ, it's not been hit here yet. And there's a lot of money in the CFDs. So the draw on liquidity NASDAQ is at these two lows until proven otherwise, right? Yeah. I've given a trade idea as well this week, which did not hit the entry, and I suspected that because there was an SMT right over here, right? Over here, there's an SMT divergence between ES and NQ. Right? So that happens sometimes. You could have FOMO'd in, right? It would have worked with less risk and reward. But yeah, didn't give the entry last week.
Also, Romeo.
Hey, Romeo.
When do you
Hi,
move?
David.
Let's
Sorry,
just say you place a blind stop. He asked, at what point you move the stop to break even? Is it when it takes the high that soup?
Beautiful. Now that is delving into my personal risk management protocols and my personal risk models, right? Which I'll discuss later on. Not now. Not today.
Also, the time when you said study why this OTE failed, that caused a lot of chaos, and every hindsight warrior started to give its own explanation. But can you go on that?
Where?
The one in DXY.
Okay.
In the very first video.
I remember. The answer is because the market makers saw me expecting an OTE and they failed it on purpose. Any more questions?
So when you expect OTEs, you can give us a signal for us to fade that, or
Yes.
how are we supposed to learn from that?
Every time, every single time. What happened was, Adam, was that they closed below the intermediate term low, right? And when you close below an intermediate term low, then you can expect them to target the rejection block and then the low of the price leg, right? On the same time frame. Right? So that was the indication that the OTE was going to fail, and this also goes to the 0.618 fib, right? Which is a key level. If you close below the 0.618 fib, right, then you use it as an inversion level to take you to the low of the price leg. And that is the answer on why do what's the indications of OTEs failing.
My answer is that bias was still bearish because the soup, it was a pseudo soup. It was a shallow liquidity pairs. That was my answer, and it is not a clear answer. But what do you think about shallow liquidity pairs? Do you expect another soup, or it just goes from there?
I'll answer your question with an indirect answer, which is all my losses are break evens, never losses. Right?
Yes, boss. I will try to understand what you said.
You understand?
So you move to break even before it gets a chance to come back.
To come back and show me if it's gonna dig deeper or not, right?
Yeah.
And if it does, you re-enter.
Always, of course. Same thing that happened last week. Remember? So I gave you a retracement of the 820 Judas, right? And then when it stabbed back into the high, I stuck to the bias, right? Because there's a high and low in price, and there's a high and low in time, right? There's two highs and lows, right? If you try and of course you can, but if you try and trade the highs and lows in time without practicing them, then you're gonna get wrecked, right? To begin with, and to help your learning process, always trade the highs and lows in price first, and then when you get that, when you familiarize yourself with the pattern that they make in time, which is the same price, but a dig deeper due to time, that is when you go and trade the time as well, right? But to begin with, just have a rough estimate of the area and trade that, right?
By time you mean the 3 to 5 in London, like that?
Yes.
Okay.
The
And
open, high, low, close, and the profiles of the candles, right?
understood. And Romeo, on the Nasdaq chart that you have right now, on Friday, if you can see, it's sort of consolidated and expanded below, right? But if you see,
Nasdaq.
yeah, the Nasdaq, and the initial low before the expansion lower on the, I think it's in the hourly chart.
You think? Or you know? Which one?
The 1 hour chart. here on the Friday, you see your initial low, right, on London,
Right.
and then it goes a little higher, and then it smacks back lower. Now that low was also it had hit the key level of the FVG on the left side of the order block.
Okay.
Right,
Okay.
right. So I was expecting price to go into the imbalance above, at least above
This
the
one here.
50% of the range. Yeah,
Right.
but it didn't. So could you explain that?
Okay. Okay. Well, even if you were expecting it to go higher, right? Here's some hindsight things in mind. Right. Number one, range low, range high. Right. This should stop you from trading, from expecting any higher prices unless you break over the same range high. Right. That's one thing. Another thing is this a trending move or is it a counter trend move?
It's a counter trend move.
Exactly. You don't want to catch. You want to pay less attention to counter trend moves, right? Try and have your focus only and solely on because counter trend moves tend to sometimes work, sometimes no, right? But if you're with a trend, then the trend is your friend until it ends. And who's calling? Okay, there's some calling. Mute your mic. Thank you very much. Right.
Okay.
So the trend is your friend, right?
So sometimes you're saying that in counter trend it might not come back to the 50%.
That is correct. It might
Okay.
stop at the 38, right? Or the 27%. What do you do? Right?
Right. And but you said that this was a range high and a range low, right? But there's a range high and a range low before that. It took
Where?
out the low, then it broke the high. So
You mean this one over here?
yeah, the smaller range before it took out the low. Yeah.
Okay. Okay, this is are you Jubin?
Yeah, yeah.
We have Jubin over here, pattern trading, right? This is that is not the goal here, right? We're not pattern traders.
I mean, it's a range high, range low into a key level, so I thought so.
Yes, but no. I wouldn't take that.
Okay.
That is not something I would consider. Plus, we're respecting. Did you look at this? The 4 hour?
Yeah, the 4-hour FAG. Yeah. Okay, yeah.
That alone is a reason to stop. Right? And the higher you go, right, the more you see the bearish PDRAs being respected and the bullish PDRAs being broken, right?
Right.
Then that would be a reason for you to avoid all counter trend trades and only focus on the trades with a trend. Right.
Got it.
Romeo, so when those lows are taken, would that be an instance when you are considering a counter trade because we're at the bottom of the range?
Even over here?
Yeah, because we're close to that monthly low and the bottom of that range there. So would that be a consideration for a counter?
Of course. And counter trend trading is also a very interesting topic, which I will also talk about, right? Because I find myself catching counter trend trades quite a bit, right? Not as much as the trending ones, but there is a method to catching the correct counter trend trades, right? Not like this, which I will also be talking about, but not now, later on. Right? I've given you more attention to chew on for an entire week. I'm pretty sure.
Can I ask?
Last question.
You mentioned 3 to 5 a.m. I have a list of times written down here. You said that beginning of London open kill zone is a good time to look for soups. You said around end of London open kill zone is a good time to look for soups.
Right.
You also said 10 a.m. is a good time to look for it, or 9:30 to 10.
Right.
And you also said London close kill zone, along with 1:30 p.m. and 3 p.m.
London close and 3 p.m. I'm usually looking for an SMT at that time, right? Not exactly.
So you're looking
for an SMT, a failure swing, right?
Okay. So what makes it different for you to look for a trade at the beginning of London Open Kill Zone versus the end of London Open Kill Zone?
Ideally, right? And the only difference is a trending day versus a ranging day, right? On ranging, I would expect 5 o'clock to go and take away the London soup that happened, right? In the same direction, right? On a ranging day. On a trending day, I'm expecting 3 a.m. to form the low, right? And that's it.
Okay. And does that change as well for your New York times, like 8:20 a.m. versus 10 a.m.? And when you expect those two times to play?
Which ones?
8:20 a.m. and 10 a.m.
No. 8:20 is something else. 8:20 is something completely different. 8:20 is you're gonna mark a counter trend move, right?
Okay.
Have that one. 8:20 is the counter trend move, and then 10 a.m. is the swing top formation, right? 9, 15, 10, 10, 10. The macro, quote unquote, right?
Okay. And do you look at these times as the beginning of the Judas, or do you look at them as you want the low to form at these times?
The latter.
Okay.
Any else?
Yeah.
Excuse me. The market makers are poisoning me.
Yeah.
You're saying, excuse me. You're saying?
So you say that there are 3 trades per day. One for the first soup, the OTE, and the last soup. Are they all A+ setups, or they could be?
If you can catch a classic sell day or a classic buy day a couple days a month, then that is that's a living right there, right?
Also, if you have a checklist like the other Twitter traders have, do you have a checklist? And if not, how do you rate the trade ideas, like the one you give, like the C plus and the C stuff?
I will go over the rating later on.
Please, Romeo, we only have a weekend, so later on is a bit too beefy for one live session.
Later on will probably be the next week, right? Which is going to be a nice juicy one, and perhaps, by the way, because you guys have paid, which shows me that you are more serious than the casual watcher, right? So perhaps I will extend it a bit more, right? Just for you guys, all right? Of course, free of charge, right? Just an extension to honor the seriousness that you guys have who joined, all right?
Thank you. Can I ask as well?
Whether you paid, whether you photoshopped the receipt, right? You were serious. And you deserve an extension. All right.
Yeah. Can I ask for your 1:30 p.m. and 3 p.m. times that you look for sellers? Do those only apply towards indices, or do those apply to Forex as well?
Forex, I like trading in the morning, right? And the index futures in the afternoon.
Okay. And for your London close kill zone, I'm assuming you look at that solely for Forex as well.
Yes.
Okay.
Although you have the same index futures, right? The same topping trade. That's the whole idea. Is open, high, low, and close, right? That's all there is.
And another question is, do you have a constant time frame that you look for a specific key level to trade
All right,
within
folks.
a hidden
It's
profile?
yes.
For each one.
It is my secret sauce 69-minute time frame. That is Enigma.
Roman, I got a quick question. When you are taking a trade like a range low position, what is it that you're immediately looking for in price to show you that you're on side?
I'm looking for it to close above the candle that stabbed into the low. That's it. It's that simple.
Okay,
right?
thank you.
Right? No problem.
Okay.
Anyway, folks, it's been quite a long one, right? Enjoy. Hugo, if you're recording still, are you recording? Are you there? Or you not just... Okay, and if anyone else is recorded, please send it to me, right? I'll post it on the group. And the people can clap for you, and you're the hero for the day, right?
Okay.
So thank you very much. Thanks for listening, folks. Monday, of course, we watch. Tuesday, we enter. And Wednesday is a classic sell day or buy day, right? So it's all planned out. Don't rush. Don't over leverage. Don't get wrecked. And I hope you have insightful. And I wish you all good luck and good trading for the week. And I will see you next weekend.
Goodbye.
Have a good week.
Goodbye. How's it going? The mic is like 5 people. So if you want to speak, you can speak whenever you want.
Hello. Before anything, how was your week, Romeo?
The week was pretty hectic. I've been extremely busy, right? In real life, managed to sneak in some posts for you. Yeah, it was good. Good. How about you? How's it going, all of you? How's it going, folks?
Pretty good, but so you were busy in real life, not the market being weird.
The market was excellent. The market was. I had called for you guys the low of the week on the dollar, right? You forgot. There was a mistake made, of course, at the beginning of the week, and the mistake was corrected on Tuesday when we had the classic Tuesday low of week on the DXY. So pretty clean, actually. Surprisingly clean price action. Why? Well, why is it weird for you? And also, Yana, their name. We hit the Nasdaq target we had outlined yesterday, last week. Excuse me. We hit the target this week. All right.
Yes, thank you. I'm interested in what you think might happen for November as we wrap up the month.
Your what?
Uh-oh, can you hear me?
It was cutting off. No. You were saying?
Okay, I said yes, I saw that I was able to get a piece of the action. I'm interested in what your thoughts are for NQ going into November since we're wrapping up the month.
I haven't analyzed, but I'll I'll give you close. Right? The month closes tomorrow. Is it? Tomorrow. When the monthly candle closes, then we can check out a direction. But for now, it looks like I can frame two ideas. One of it going to the October lows, right, on the index futures, where they just dump down to the October lows, or Nasdaq makes a new all-time high. So I don't like when the market gives me two directions which I can frame, right? So I will wait for the monthly candle for a clear higher time frame direction. Otherwise, we simply trade intraday, right? Intraday, you trade the 4-hour candles, daily candles, and you take your slice. All right.
Okay, thank you. I'll check back in a couple days then when it closes.
No problem. Anyone else?
Hello, Romeo.
How's it going?
Good, thank you. I want to ask a question about mindset in time of executions. Could you explain for us how could it be?
That's a good question, and that is everyone likes to talk about strategies, right? Strategies and 1 to 2,000 RR, right? And order blocks, FPGs, but nobody talks about the actual execution, right? Because one thing is analysis, and another thing is a whole different world is execution, right? To execute correctly, you have to first of all know your model. Right? Once you know your model, you can trust your model and execute fearlessly. Right? Like a robot, like an algorithm. Right? You just press the button. Whatever happens, happens. And one thing that helps you with this is the fact that you're going to journal every loss, win or miss. Right? So it's a win-win. If you win, you make money. If you lose, you learn a lesson. And if you miss, then you learn a lesson. All trading mindset, there's no mindset. It's just a button, right? You either buy or you sell. How many times you buy and sell profitably, that comes down to your edge, whatever it is, and how well you know your model. You understand?
Yes, thank you. I want to ask another question about what we seeing in the charts. Uh, Between the trees are differences. So I always see MMXM market maker sell model or buy model, and another models. Uh, could how could I choose one of them? I don't know. When I'm in the chart, I saw many of the models, many of the strategies, but I can't choose one of them.
Okay, so you're saying you open the charts and you can frame models too.
Your
Is my
voice is
voice clear?
breaking. Sorry. Right now it's clear.
All right, folks. Is my voice clear? Is it audible?
Yeah.
Yes.
Yes. Before, is anybody recording? Okay, I'm sorry. Hugo. Oh, so there you go, guys. Hugo is recording. Sorry, Romeo.
Excellent, no problem. Hugo, thank you very much. We all appreciate you. Thank you very much for providing the recordings. The person asking MP412 from Iran, I'm assuming because that's Farsi.
Yes, I'm
You're
from
asking,
Iran.
you're asking if you can see multiple buy and sell models at the same time, then what do you do? Right?
Yes.
Then you do nothing. If you can frame multiple directions to price, you're either incompetent because you don't have a model, right? Or you are not looking at price or the charts through the lens of time, right? Because that provides an outstanding clarity. And if you still see nothing, then you simply do nothing. When in doubt, we stay out, right?
Yes.
And allow me, folks, I'm going to take a break right now. Allow me a 10, 15-minute break, and I'll be back to you. All right?
All right.
Thank you.
How's it going, folks? I'm back. I had to go and pray. I had to go and pray. So excuse me.
اللهم تقبل, or what do you guys call it in Saudi?
Yep, تقبل الله. Okay.
تقبل الله. Yes.
Do you see my screen?
No.
Did you get a nice break without me? No?
Yeah, we watched the 3 videos you sent.
Nice. Very nice. I just watch. I don't know questions. Okay. 820. Right. Hugo, are you still recording? Yeah. Okay.
Before you start, Ashik Navas wants to talk. The guy with the shadow on the profile.
Tell me, Ashik, what's up?
He's muted, I think.
No, he has permission. All right, see, how do we do this? We first do the review, all right? And then we ask questions. Sounds good? All right.
Yes.
Do you see my screen?
No.
Okay. How about now? Share
Still no.
screen. Now?
Yes.
Adam, can you confirm that Hugo is recording? If you don't mind. Thank you. Okay, let's go. Once again, Euro, USD, right? Because we're trading the dollar's direction, right? We have the DXY. Looking good. In the last stream, I had said that we expect a rally from this FVG, remember? And if it fails, then we expect the original weekly FVG, which we had. It gave a reaction, obviously, right? But then it broke down. So we can expect a reaction from the weekly FVG, right? So as with every week, we have the weekly open drawn beforehand and a key level, right? And the drawn liquidity, which for dollar is over here. And this information should be, there you go. All right. So once again, we open the week, we smack into the key level, and we rally. This alone is a trade and was the trade for this week, right? Accumulation, manipulation, distribution, open, smack into key level, and trade it back, all right? So yeah, it was a pretty clean week, and we expect a continuation for the dollar to the drawn liquidity, which is up here, all right? Now, what happened here in euro, right? If you had this breaker marked, then you are on the right path. However, and of course you have these equal lows, right? If you were a pattern trader, then you would have expected these equal lows to be taken, but if you check the euro chart, then on euro, the equal highs were indeed taken. And that was an SMT top, which formed the weekly high. SMT is usually it usually plays a role in the formation of important swing points. And you're stuck between these two PD arrays, right? As you can see, the gray shaded areas. It's stuck between this and this. So we expect this one to send us back down to this one, right? There you go. Fantastic. Same thing, open, fade the initial direction of the open under the umbrella of PD arrays and key levels and ranges, up here range, right? And so on. And if I'm not mistaken, this was also a Monday high to low play. A pretty clean week. So I don't know why some of you were complaining, saying it was unclear. It was pretty clean. And it's not just only in hindsight. Down here, I posted on my account, the other account, Turtle Soup Central, which is the low of the week was formed right over here. All right. And yeah, pretty smooth week overall. Now, we move on, and of course, NASDAQ. Let's go to NASDAQ. NASDAQ, because these are the two main markets we're trading in this group, is Forex and the index futures. Let's remove that. Excuse me. Remove. And there you go. Fantastic. Now, questions. Before the questions, I owe you all the private Bitcoin review. Remember?
Yes.
Bitcoin looking primed.
And
excuse me. Remove. Yep, there you go. All right. Now, Bitcoin's ranges play out a lot cleaner than most other asset classes I've noticed, especially on the 4-hour, the daily, and the weekly, right? Which is why you've been able to, with quite an impressive accuracy level, been able to tame it all the way from down here till up here. Now, what happened here? And why were these equal? Of course, if you looked at it as a pattern only, then you would have expected that the range high takes us to the range low, correct? Why did the range high not take us to the range low? What happened here?
rejection block or SMT.
Again?
And rejection block or SMT and the higher time frame bias. We don't even need to take that low to go up.
The reason was, over here, compare Ethereum, good old crypto, scam market, Coinbase, there you go. ETHUSD, new pane, chain to candles, black. Something you're missing. There you go. Fantastic. Okay, so if you look here, we have an SMT forming at the lows, correct? SMT forming at the previous range's breakout. Remember? Previous range, range high, range low. SMT formed right here at the lows. And even if you expected the lows to be taken out, then you should consider an entry because SMT is the truth, right? And now there's a massive bearish SMT forming as we speak, and that is why we expect Bitcoin to drop back down to 24,000, right? Which is a pretty good trade idea if you can capitalize on it properly. Now, further signs and confirmations within the SMT, you go to the daily, right? If you remember the order block lesson we took at the beginning of this month, stab into the low. As soon as we close above that candle, then boom, we're ready, right? Also, we had a break over here, right? We called this counter trend retracement below old high. It gave a retracement to the 50%, and it exploded out of the range. All right.
Also, you've drawn controversy when you said what's the number of the candle it reached target on. Any tips on how you did that, or is it the Morpheus candle counting stuff you did back in March?
How many candles did I say it will take to reach?
7.
I mean, 7 from the bottom.
No. 7 from the market structure shift, right? And how many candles did it take?
8, I think.
7. Go. 1, 2, 3, 4, 5, 6, 7, 8. That is correct. Yeah. So off by 1 candle. Good enough for a yearly projection, right? Turtle soup. So from down here, I analyzed, right? That the target is up here, and that will come in the yearly review of Bitcoin at the end of this year, end of the markets. If you go back to my old tweets, then NASDAQ. Right, let me see if I can pull up the tweet. Let's see. And this goes into another topic, another concept, which is projecting candles. All right, projecting price, upside target, NASDAQ. If you Google upside, then you have this over here. If you check the group chat, all right. Can you see the screen, guys? And
I
can
can
you hear me?
see NQ.
Yes, weekly, right?
Yeah.
Okay, correct. Adam, it's your connection, which is incorrect. Your connection is out. Good. Okay. So that was basically the Bitcoin review, concise and to the point, right? Range low to range high with the 50% as a key level of the range. There was no reason to be bullish, to be bearish below this low or down here, right? Now, here's a question for you. When would you flip? Let's go back in time. When would you flip bearish? Over here. Anyone? The mic is with quite a few people.
If we went in low, that intermediate term low.
When price closed inside the range.
Close inside the
When
range.
you have candle closed. When you have a candle closed.
There's only one answer, which is when price breaks this low, right? When you close below the low, it's over, right? We didn't even come close. The rejection block was more than enough, plus the 50% of the wick. The 50% of the wick is also a model by itself, which is which will be elaborated on in the future, not now, along with the gap-to-gap model and some other stuff, right? We have some good stuff coming, right? But for now, that is the Bitcoin review, and expecting Bitcoin to tank and crash down to 24,000 US dollars.
So when projecting stuff, we need a range and some big candles to count 7 on. So,
no.
Okay. What do we need then?
You need to understand liquidity pools and the quarterly shifts. Right?
Yeah, but I'm talking on the time frames, because you said you can project an hourly candle.
That is correct, and you can also use the quarterly shift on the hourly time frame, right, and lower.
Yeah, that's what I'm coming at.
Yes.
What is any tips on how to count 7 H4 candles, or is there an Enigma time frame to count 7 candles on? And don't tell me it's the 69 minutes.
See, that's the answer for now, right? Later on, we'll delve deeper. I mean, no one's going anywhere, right? I'm not going anywhere. I'm stuck here in the markets, trading, analyzing day in, day out, on Twitter, Telegram, and here. So I'm not going anywhere. So don't worry. You'll get all the information you need.
You will be telling us the logic of the 7 candle counting stuff.
That perhaps not, but I will explain how to use the shifts on the lower time frames. Right?
Inshallah, when?
Inshallah, in the future.
Okay.
In the future. Right? Any questions?
Yeah, loads of them.
Tell me.
We got a bold guy asking, yeah, some guy asking, he said, let me tell you, if there is a relation between the size of the stop hunt in terms of pips and the time it should range before it reverses? Do you understand what he said, or should I explain?
The longer the accumulation, the deeper the stop hunt. And this brings me on to a topic which is the difference between this and this. Right? when is this and when is the other one, right? So let me introduce for the first time low resistance top versus a high resistance top or bottom, right? You might have heard the term thrown about by me, right? Thrown around by me here and there. But this is the intro to the topic. Sometimes price will simply stab into the high and crash, or it'll stab into the high, spend some time up there, and then crash, right? Low
The sneaky
top
high stop.
versus high resistance top. The sneaky highs and lows are another topic for later, and this is also another topic for later. There's discoveries being made all the time, right? I don't like sharing stuff before it's refined completely. You understand?
Yes.
So I'd rather refine it, make it crystal clear and easy to understand, and then I will share it with anyone. And the knowledge of the charts is endless. You can keep discovering stuff forever, right? It's about picking one and mastering it.
So the question was, I don't think you understood it correctly.
I did. The answer to that is, the longer the consolidation, the deeper I expect to stop hunt.
Okay. Also, trade classification.
The qualities.
Yeah. You said you'd risk X amount and you're dumb if you don't take that and stuff, but the technical stuff about classification you didn't go over.
Qualify an A plus setup, right?
Yeah, how do you, what's the Romeo A plus setup? Yes.
Okay. Okay. How about I share that in public this week? Sounds good.
Okay, good. How about the C setups you were posting? What you're gonna go over that too, or
the Euro USD one, right?
Yeah, the past Friday, the 20th. You said you will go over that. The 20th of October, I think.
The 20th of October. Let's see. Friday. This one, right?
You said it will be no. The past Friday. You said it will be a lower time frame discussion because you posted a trade idea at like 8:15 stuff before the 9 candle.
That is correct. You reminded me of that trade, which was right over. Where was it? It was this one over here, right? It was from here to here, right?
Yes.
All right.
you also didn't put a classification on that one.
Yeah, that was a quick slice from the markets. That was not intended to be anything high quality. You know, it was just a setup I had thought of or saw coming rather on the fly. And there you go. You can have the review. So what I saw was, first of all, before I proceed, this was how price was at the time, right? Let's go back. Good old hindsight bar replay. Thank you very much. We were here, correct? Now, we expect Friday to be a choppy day. Yes or no?
Yes. Ping pong.
Right. Very nice. We had here a classic, if you watch the video today, right? What have we had here? A daily open, right? And the daily close. So far, we have had Asian range low to high, correct? For those who watched the video today, Asian range low, Asian range high, market structure shift, and if you go to the high time frame, then this is like a low-hanging fruit. This was an untouched rejection block on the higher time frame, correct? And on the 1 hour, it was an order block, the opening price, correct?
Mm-hmm.
And on the 15-minute, it was an FVG above a high. So this was a no-brainer, right? If you go even lower and lower and lower, right? Then all I expected was to go and trade above the high and smack back down into this range low as target 1, and then these two equal bodies as target 2, right? And that is precisely what happened, right? So it was aligning those overlapping time frames, the 4 hour plus the 1 hour plus the 15 minutes, and the time that they happened, which was at the start of New York session, 7 o'clock, right? Open, key level, and smack back down, right? Very simple, very straightforward. Open, key level, bounce. The same, using the same opening price as a pivot point, right? As a means to measure the bounciness, so to say, of price, right? Open, key level, rejection block on the higher time frame is an order block on the low time frame, and smack it back down. Blending that with, of course, the classic range theory, range high to range low. Now there is a way to anticipate whether this is a false versus a real breakout, right? Which is Vikash's question I saw in the group chat, right? Which is definitely an important question, right? How do you expect this to come back down versus expecting this one to expand higher, right? And that is a topic I would like to discuss in detail later on. So we have a few pending stuff going on, a few pending products about to roll out in the upcoming weeks, and months. Ideas, models, call them whatever you want, but they're all on my mind. All right? And that's
So we will not be going away in November.
No.
That's good.
Not this November. Perhaps later on. Any other questions?
What would get you interested in BTC going back down?
What do you mean?
Well, you were talking about it's going to go back down to 16K, but what?
No, I said it's going to go to 24,000.
Okay. What's going to get you interested into that move?
What do you mean?
What do you have to see?
I mean, it's showing signs of weakness already, right? It's showing signs of weakness as we speak over here into this weekly FVG, right? So this would be my area of interest to look for the shorts inside this weekly FVG, right? You can be a hero and try to catch the top, or you can wait for a confirmation to see if you are provided with a clean setup with a marked top already for you, right? The yearly high over here somewhere, right? With the FVG as the buffer and the litmus test for your bias.
Personal risk management technique. You said that was a this week topic.
Did I?
What about when do you move your 1, 2, 3 stop to break even and so on?
Personal risk management technique. Did I say I understand this week, Adam? You sure?
Yeah, you said that will be a topic discussed
later
when
on.
I asked.
This week? I don't think so. Because I have my notes here beside me. Let me check. Let me go through my notes. For see Euro DXY. No, it's not this week. Not this week.
Yeah, but it's a question. You're gonna dismiss that too.
This one is. I'm sorry, Adam.
No, okay. You did enough.
Tell me.
Hello, can you hear me?
Yes. Yeah.
I was gonna ask, what was the on Thursday for GU, right? What was the logic behind your GU trade? I think it was on Friday.
On Friday.
Friday, yeah.
This Friday.
Yeah.
What? No.
Friday just gone.
GU or EU?
I think it was on GU, no?
It was.
EU?
Did I post it? That was the trade I took in private. Did I post it over here?
Yeah.
SMT.
Okay. And you know, on Thursday, how Thursday caps the weekly range, right?
Right.
Usually.
Right over here. You see that?
Yeah. If you was to trade on Thursday, you'll be trading against the weekly buyers. How would you anticipate when to take profits? Would you scalp, or where would your would you do the thing where you do every exit's an entry, every entry is an exit?
That is correct.
Okay, cool. Thanks.
We target imbalances and highs and lows, right? That's all.
Yeah.
Classic ICT style.
All right, perfect. Thank you.
No problem. And highs and lows, by the way, meaning wicks and bodies, not just bodies, not just wicks. All right.
Okay.
All right, folks. This has been going on for a while.
No, wait.
Tell me.
Wait, now I'm lost. So you said, let's recap the later on topics. You said the true breakouts and false breakouts is for later on.
Can you write down the stuff I'm saying this later on and send it to him DM, Adam?
Okay, I have a list.
Send me because I was looking in the group chat and I saw some questions being asked, right? But if you can be so kind as to gather them and send them to me on DM, right? I'll address them in a separate video. I know the month is over, right? However, which means, of course, that this whole group is over. This whole event, this show has come to an end, right? However, I will be with you guys for at least another week.
I sent them.
All right, so send them to me, and I will make a separate video for them next week, inshallah, and I will go through some personal mistakes which I used to make back in the day, and some interesting common mistakes which I think many of you will find useful. All right. Just make sure, Adam, if you can, to gather all the commonly asked questions. Guys, if you're listening, if you're watching this today during the stream or afterwards, then please send me your questions and I'll pick the ones that are of relevance and make sure to answer as many of them as possible, right?
I sent them just now.
Okay.
Romeo, for EX on the S&P on the daily chart, how would you have hypothetically have gotten in for a one shot, one kill on the last week we just had there?
Are you asking me to review the week?
No, not necessarily review the week, but just how would you have hypothetically gotten in for a one shot, one kill? Like
I mean, see, hindsight is 20 out of 20, right?
Of course, that's why hypothetically.
But the classic Monday range, right? Monday, right? Monday high, Monday low. That's it. That's your one shot, one kill, right?
Right.
More often than not, Monday's range will offer you a pretty clean setup, as we saw right now, right? Over here. And this range, which was broken, an extremely important concept, previous range broken and retested. Can you hear me?
Yeah.
Yeah. So Monday accumulation, Tuesday manipulation, and you write it down till the end of Wednesday, right? Which Wednesday will be a classic sell day if you're bearish, right? Monday, Tuesday manipulation, Wednesday classic sell day.
A question by Ibrahim, which he couldn't attend.
Tell me.
He asked me a plethora of spoon feeding questions, but I think that his question was, let's just say you tell us that you hunt from 3 to 5, but you obviously take soups on 2:30 and stuff. And you only hunt 9 to 1 H4 candle, and you take setups before that. So when do you get on your phone, on the chart especially? and if it ranges, if it goes against your will, when do you go again? When do you expect the soup to happen?
The answer to your question, Adam, is in today's video. each time for each turtle soup, right? I'm expecting it to happen at 3 a.m. If it doesn't happen, then I wait till tomorrow, 3 a.m. and so on, right? I'm expecting it to happen 9:30. If it doesn't happen today, then I wait till tomorrow, and so on. Oh, meanwhile, what do I do? Meanwhile, you study the mistake. You go have a coffee. You hang out with your buddy, your friend, your wife, your mother, your father, whoever you have, right? If you have anyone, and you enjoy life. Life is not all about the market.
Ibrahim.
Life is not all about the markets, right?
So what about the high risk reward model?
The what?
The high risk reward model.
Did you attend level 2?
Yeah, I did.
Okay, it was a version of it.
USG
No, a version of it was mentioned over there. The higher time frame range. You take a lower time frame range below the higher time frame range, and that is it's a beauty. That's it. There are some spins on it, some twists you can add if you think out of the box, right? Some pretty creative things you can do with it. But that's the basic premise: is a higher time frame range, which has a lower time frame range, and you risk according to the lower time frame range. That's also an answer to the question, which is when do I leave runners? You leave runners when the higher time frame bias is aligning with the lower time frame Judah swing you're playing, right? So something, there's a range up here. Look at it. Yeah, that's any more questions from Ibrahim? Adam?
He also asked when concerning PM session, when, because you tweeted that you go 1:30 and 3 p.m. When do you choose at what time you will hunt?
They both have
When
their
do
own
you?
role.
Okay.
They both have their own role. It's not the same thing.
Also, Ashik Navas wants to answer the question by himself. He didn't want me to answer. So can you unmute him?
He wants to ask, come, let's see. Ashik Nawaz, I don't see you. Ashik Nawaz, he's not here. All right.
The rich, the guy with the star asked too. The premium guy, the rich guy. The one raising his hand.
What's up, Rich? How are you? Rich, you have the mic. Tell me.
Yes, mate. Can you hear me?
How's it going?
Yeah, good talk, mate. Romeo, all it was, what I was going to ask you was, obviously you've said the key time of day for you is 3 a.m. or 9:30. So
right,
when you have the key level, then which time frames are you watching specifically first before you move down to a lower time frame? So which candles are you waiting for? You're looking at the 4-hour candles, for example.
You got the 4-hour, you got the 1 hour, and I've sent some examples. Did you come to level 2, Rich?
Yeah, I did, mate. Yeah.
Yeah, over there you have a beautiful example of the 1 hour, right?
Yeah, I've seen that. But you specifically, though,
and
what do you use specifically?
I received also, by the way, I use both. There's not one I use in particular, right? But the 4-hour offer is pretty good trades.
Yeah. And you're using 159 times as well, aren't you?
Yes.
Yeah.
I saw you on Twitter, right? You're doing good.
Yeah,
On
nice
Twitter,
one,
you're
mate.
doing
Thank
pretty
you.
good.
Yeah.
So
I'm trying.
good for you.
Yeah.
Good.
It's
not bad for 10
it's like trying to learn. It's like trying to learn a PhD.
Yeah. It's pretty good. Pretty good. And well done.
Yeah.
Well done.
Yeah, nice one. Thank you.
Well done. I received your messages through the secretary, by the way.
Yeah, no problem, mate. Thank you. Yeah.
Okay,
Well,
I'll
yeah, if you can get back to me or whatever, that'd be brilliant.
I'll respond to you when
Yeah.
I can. Okay.
Nice one. Thank you very much. Appreciate that.
Thank you.
All right, mate. Thank
Good
you.
luck, huh?
Cheers. Yeah, nice one. Thank
Good
you.
luck. No problem. All right, folks. This concludes with Rich and his questions. We conclude this live stream. All right. I will send homework and eye drills in this group constantly throughout the upcoming weeks. Right? Because it's one thing to give you the concept, and it's a totally different thing to apply it, right? And get used to it. So I have that in mind. There is nobody who emphasizes more on live forecasting than me, and that is exactly what I'll be doing. And once you see it, you can't and you will not unsee it, right? And take care. Have a good rest of your day, wherever you are, and good luck and good trading. And see you all later. And Hugo, please send the recording. I'll pin it in the group. We all appreciate you. Thank you. Goodbye.
Okay, thank you, Romeo. Thank you, Hugo. Thank you,
Cheers.
everybody.
Yeah, thanks, mate.
Yeah, thanks, man.